All right, guys, I'm going live early. Because Trump's live. So we're going to get straight into it, but I'm going live early, and we'll be analyzing this in about 20 minutes. Here we go.
Thing that I want to be involved with, or frankly, that Israel wants to be involved with if they can avoid it. So we're going to see if we can avoid it. But it's getting to be very dangerous territory. And hopefully those talks will be successful. And I think it would be in Iran's best interest if they are successful. We hope that's going to happen. And we had just a lot of good talks on a lot of things. I appreciate very much what you said about the tariffs. We've been ripped off and taken advantage of by many countries over the years, and can't do it anymore. Just can't do it anymore. Can't be the stupid people anymore. And it's all because of the people that sat in the seat right here, not your seat, but this seat. They allowed things to happen to our country that they shouldn't have allowed to happen on trade and other things, many other things. I mean, look at what's happened with our last president, where he allowed millions of people to come into our country with an open border. Who would want an open border? How stupid was that? But he allowed millions and millions of people, and of the millions, and I think it was 21 million people, but let's say 3 of them were serious criminals, serious murderers and drug dealers and gang members and people from jails. All the jails emptied out right into our country, right along the open border on Mexico, generally the Mexico. Okay, they came in from Canada too, by the way, a lot. But generally speaking, on the southern border. And what a shame it is that we are now working very hard to get them out, get the criminals out, get the murderers out, the drug dealers, the mentally insane, get them out. They dropped the mentally insane in our country too. And this was all done by the Biden administration. It's a disgrace that we have to work so hard. And then we have judges that try and protect these people, but they didn't protect us when the people were being let in. But to get them out is never easy with these people. So I think we're doing a great job. The border is the best it's ever been. It's even as strong as it was. I had a great, solid border. I think it might even be tougher right now and stronger. So people are coming into our country, but they're coming in legally. We have a legal process, and we have that moving along properly because we need people to come into our country, but we want people that can love our country and cherish our country. So that's where we are. And with that, any questions?
Mr. President, European Union to the markets today, and would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many, many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals. As you know, I spoke this morning with the Prime Minister of Japan, and we had a very good conversation. They're coming. And I said, one thing, you're going to have to open up your country because we sold no cars, like 0 cars in Japan, and they sold millions of cars into our country. They don't really take our agriculture, a little bit of it just to keep us slightly happy, but they don't take what they're supposed to be taking. So we have a great relationship with Japan. We're going to keep it that way, but they're coming in to meet, and other countries are coming in. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China, but they can't do this. We're going to have one shot at this, and no other president's going to do this, what I'm doing. And I'll tell you what, it's an honor to do it because we have been just destroyed. What they've done to our system. You know, we have $36 trillion of debt for a reason. And the reason is that people allowed it to get that way. So we'll be talking to China. We'll be talking to a lot of different countries. And I think, you know, if we can make a really fair deal and a good deal for the United States, not a good deal for others. This is America first. It's now America first. And we didn't put America first. We put America last. The people that were in the Oval Office put America last, and we're not going to stand for it. Yeah.
Mr. President, who's going to represent the U.S. in the talks with Iran?
Two questions. Do you expect any of these deals to be made before April 9th? And secondly, there have been some mixed messages from your administration. You're talking about negotiations, and yet others in your administration are saying that these tariffs are actually permanent. What is the action?
Well, it could be. They can both be true. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs. We need open borders. You know, we almost had a deal with China where we're going to open up China. It was almost done. Some of you remember it during my first term, and it was very disappointing. We ended up making a great deal. $50 billion worth of product was sold. $50 billion. You'd like that in Israel. And I made that deal, but it wasn't the deal that I wanted. It was the deal that I wanted was that, plus they were going to open up China so that our companies could go into China and compete with other countries and China for the, for a large number of people. And at the very end, that deal was terminated, and we went to a piece of the deal. And so there are a lot of things outside of tariffs, but tariffs are very important. But there are a lot of things like opening up countries that were totally closed. China's essentially a closed country. In fact, it is a closed country. And what they do is they charge tariffs so that if you sell cars or if you sell anything, nobody's going to buy it because the price is out of control. But that's true with a lot of other countries also. So we're going to get fair deals and good deals with every country. And if we don't, we're going to have nothing to do with them. They're not going to be allowed to participate in the United States.
Mr. President,
Many of time. This gentleman is all day long.
Mr. President, thank you for the chance. Many of Palestinian Americans who voted for you and not for Biden because you've promised them to end the war in Gaza.
Very honored by that vote, too.
The war is still going on and there's no hostage deal. Do you have any update on that?
Well, I'd like to see the war stop, and I think the war will stop at some point that won't be in the too distant future. Right now, we have a problem with hostages. We're trying to get the hostages out. We got quite a few of them out, but it's a long process. It shouldn't be that long. We have a big problem that we've done. I think I'll ask Pete to maybe talk about it for a second, because a lot of people are asking. The Houthis, we've been very tough and very successful militarily. We've really damaged them badly. These were people shooting down ships and other things, by the way, flying objects like airplanes. And we've put a major hurt on the Houthis, which nobody's been able to do. We've really hit them hard, and they know it, and they don't know what to do. And it's every night, night after night. And we've gotten many of their leaders and their experts. They're experts on missiles. I mean, they actually make missiles. Nobody thought that, but they make missiles. They're highly sophisticated, and they're very tough, but they've been very badly damaged. Nobody else was able to do that but us. Pete, you want to discuss that, please?
Yes, sir. It's been a bad 3 weeks for the Houthis, and it's about to get worse. It's been a devastating campaign, whether it's underground facilities, weapons manufacturing, bunkers, troops in the open, air defense assets. We are not going to relent, and it's only to get more unrelenting until the Houthis declare they will stop shooting at our ships. And we've been very clear at the Iranians as well. They should not continue to provide support to the Houthis, and that message has been made very clear. So we have a lot more options.
Okay, we're going to continue to monitor those events taking place now in the Oval Office.
All right, so we started early because Trump was live, and we got the main question out of him just now about tariffs, which his response was that we are not pausing tariffs, but we're going to be looking into deals, which has kind of been consistent with what he's been saying over the past couple of weeks. Thank you, everybody, for joining. We are live Monday, April 7th, 3:36 p.m. You know, quite frankly, markets are holding up today. It's been an ugly day. The S&P 500 right there. We got 23 minutes left of the day. We'll see if we end out green. Even if we don't end out green, it doesn't look like we're going to end out as red as we were at the beginning of the open when we were down about 4.5% at 481. Right now we're at 505. Obviously, today has been a wild day. For those that missed the open, we went from 480 to 520 off a headline that the tariffs were delayed for 90 days. That headline ended up being fake news. It was not true, but it went viral. Markets reacted to it violently, and we not only gained everything we lost, but we gained 2% on top of that. Now we're right back down to basically flat on the day at 505. So we didn't get as low as we got when the market opened at 930. Maybe a lot of money stepped in, probably felt that this was just getting too oversold, and that's why we're seeing this bounce. But today could also be a dead cat bounce as we get into the April 9th official tariff implementation, which is going to be in just a couple days. NVIDIA right here at 98.10, that's up 4%. Tesla still down 2.3%. Maybe it goes green on the day, but Tesla still is red. HIMS is up 7%. Amazon's up 3%. Apple's still down 4%. Them getting hit, a little bit disproportionately with the tariffs and the new Trump announcement on China that we'll talk about in a second. Obviously, Apple having all their supply chain in China, so that's not the best for them. Newsmax is up 5%. Meta, nice recovery from 470 to 520. That's up 3% on the day. Baba, that's down 9%. China not doing the best. FXI down 7.8%. TSM, a bit of a recovery as well, 130 to 145. Basically flat on the day. Robinhood as well, up 3%. Open Door is up 5%. Rocket Labs up about 8%. Grab, I did buy Grab today at 344. It's at 348. That one's still down 7%. Grab's going to have their first ever product day tonight at 10 p.m. Eastern. I'll be streaming it live. But slight recovery there. Overall, still down on the day. And then MicroStrategy right here down about 5.5% as Bitcoin is up almost 2%, 78,797 currently right now. So, I mean, look, it's nice to see some of the momentum across a variety of names. The problem is there's some lingering questions, and I don't think there's answers to a lot of those questions. Here's one of the biggest questions today, which might be explaining why the market is up, but it's not necessarily good if this is up because the market's up, which is the 10-year. 4.166%. It was supposed to come in below 4%. That's what the futures were projecting last night. Now we're above that. It makes sense, right? Because when the 10-year was below 4%, markets were at close to 480. Right now we're at 505. So the 10-year is probably not going to be at 380 if the S&P is still above 5,000. But if that's what the administration has been wanting and that's not what they're getting, I could only imagine that there's more chaos to come until they get this yield to come down further below where the levels are that they've been asking for the past couple months now. And so like, this is one thing that is concerning. Again, it's nice to see some of the green. I think a lot of people are not believing the green right now, which is fair. NVIDIA at 98. Do you really buy into that when it was just at 86? I mean, on a fundamental basis, NVIDIA trading at 23 times. Yeah, that's cheap. But like, what exactly is the narrative here going into Q1, and how do we understand what's going to happen after April 9th, where maybe the market is still believing to some extent it's not going to be as bad because we'll get some deals in the next 48 hours. But if we don't, and these are the actual tariffs that go into effect, obviously that can affect equity prices really badly as well. Is China selling bonds? Someone's selling bonds today. I don't know if it's China. It wouldn't surprise me if it's China. That would be their form of essentially negotiating, right? But as of now, we don't know exactly who is selling those bonds. If it's foreign countries, then that might be their way of kind of combating us when it comes to these retaliatory tariffs. Okay, a couple of headlines I want to run through, and then we'll get into a lot of other stuff. Thank you, everybody, being here today. Again, we will have a bunch of different pieces of news to analyze as we get through the show. Is Trump back? No, so Trump's not live anymore. I mean, if he's live, he's with Netanyahu. He already talked about tariffs, so that was the main thing people cared about. So I don't think he's saying anything else that's too crazy. We'll get the headlines if he is. But here's some other headlines today that I thought were really important. And right now, it's very telling kind of how this is playing out. Okay, so here's the first one. Take a look at this. Kimball Musk, significant shareholder of Tesla and obviously Elon's brother, he writes, "Who would have thought that Trump has actually been the most high-tax American president in generations? Through his tariff strategy, Trump has implemented a structural, permanent tax on the American consumer. Even if he is successful in bringing jobs onshore through the tariff tax, prices will remain high and the tax on consumption will remain the form of higher prices because we are not simply as good as making all the other things. A tax on consumption also means less consumption, which means less jobs, which in turn leads to less consumption and then even less jobs. America has incredible strengths. We should play to those strengths and not be forced to play our weaknesses. Same with the rest of the world." look, there's two pieces of analysis here that I think are really interesting. Number one is, and then we'll get back to Trump in a second because I think he might be talking about some stock market stuff. Number one is I think I think Elon wants to agree with him, but cannot publicly say anything because of the fact that Elon is so close to Trump. But there's no doubt in my mind that Kimball didn't send that to Elon first and be like, hey, are you okay with me sending this? Because obviously Kimball doesn't want to ruin the relationship between Elon and Trump. And I think Elon was like, yeah, go for it, send it, because he obviously is upset about everything that's going on right now. Number two, Kimball's realizing this is going to have impacts on Tesla. Kimball's a big shareholder of Tesla, so I'm pretty sure from that perspective, that's where that tweet came from. The big takeaway, though, is that I think Elon wanted to say that, but he couldn't say that. And as a result, his brother is saying that, and Elon's probably co-signing it as well. All right, we'll get through some other headlines. Here is Trump. Let's see if he's talking anything markets, and then we'll keep going from there.
So now it's really turned around. It's the opposite. And the European Union's been very bad to us. They don't take our cars, like Japan in that sense. They don't take our agricultural product. They don't take anything practically. And yet they send millions of cars in a year, Mercedes-Benz, Volkswagen, BMWs. They're sending millions and millions of cars into the US, but we don't have a car that's been sold to the European Union or other places, but let's go for the European Union. And it's not going to be that way. It's got to be fair and reciprocal. It's got to be fair. It's not fair. We have a deficit with the European Union of $350 billion. And it's going to disappear fast. And one of the reasons and one of the ways that that can disappear easily and quickly is they're going to have to buy our energy from us because they need it. They're going to have to buy it from us. They can buy it. We can knock off $350 billion in 1 week. They have to buy and commit to buy a like amount of energy. And we have that. You know, we have more energy than any country in the world. I don't know if you know that. He knows everything, but the one thing he may not know, we have more energy than any country in the world. We have more of every kind of energy, every form of energy, from oil and gas to coal. And people talk about, I call it beautiful, clean coal. As you know, Germany is opening up a coal plant a week. They tried the windmills and it didn't work. They tried all the other solutions and they were ready to go out of business. Now they're doing a coal plant a week. China is now up to 2 coal plants. They're opening 2 major coal plants every single week in China, all over China. And then we're not allowed to use coal. Well, we have clean, beautiful coal more than anybody else. We have oil and gas more than anybody else. We have the most energy of any country in the world, including Saudi Arabia, including everybody, by a lot. And I took it to number 1. We were number 3, and I took it to number 1 during my administration. And the reason that we were hurt so badly and the reason that we went into such incredible inflation during Biden is energy. It was also their bad spending, but energy, because they played around with this incredible thing that we had built, this administration had built, and the energy costs went through the roof. And when that went up, everything else followed. Now, if you look at what's happening, you're going to see this today. I said, we're going to try and get groceries down, right? An old-fashioned term, but a beautiful term. Eggs. So when I got in, the press went absolutely crazy the first week. They said, eggs have quadrupled in price. I said, I just got here. Tell me about it. And Brooke Rollins and our team did a great job. And eggs are down now 79%, and they're all over the place. And this was a problem that somebody else would have taken a long time to cure. We have energy is down. We have interest rates are down. We have groceries, meaning food is down. We have everything is down at levels that nobody ever thought possible. Energy looks like it's going to be in the $2.50 a gallon range and maybe below that for a car. So for gasoline. So we're really doing amazing. I mean, we're cutting prices because prices got so high, people couldn't live. I mean, the prices for groceries, the prices for standard groceries, standard things were going through the roof. They couldn't live. And now those prices are coming down. So call them groceries, but that's down, energy's down, and interest rates are down. Everything's down. And the interest rates, the beauty there is when we refinance debt, you know, debt's become such a big factor in this country. We're going to start paying debt off with tariffs and other things. But it's such a big factor because the interest rate's so high. Well, now that's coming way down. So our budget's going to look a lot better because interest costs are way down. And I guess I've done that.
Many Israelis are watching you now on live show.
Good.
What is your specific way of getting the hostages out from the horrific captivity?
We are trying very hard to get the hostages out. We're looking at another ceasefire. We'll see what happens. But we want to get the hostages out. The Israeli people want the hostages out more than anything. They want the hostages out. This man is working very hard with us to do that. I mean, I don't know. I hope he's being appreciated because he's been a great leader. He's working very, very hard on the hostages and many other things. And there are plenty of things you have to work on. It's a tough place in the world.
I have a good partner.
Yeah, you do have a good partner, and so do we. We're working very hard on the hostages.
If you're going to negotiate a new deal with Iran, can you elaborate how it's going to be more effective than the JCPOA?
Well, I can't really say that, but I think it'll be different and maybe a lot stronger. But they were so happy when we made that first deal because we did get a lot out. You know, I had people right in this office, this beautiful Oval Office. They came in, 10 people, hostages, you know that. And I said to them, so how was it? And the stories they told me, I mean, as an example, I said to them, was there any sign of love? You were there, 10 people. It's only 10, but it's pretty representative. Did the Hamas show any signs of like help or liking you? Did they wink at you? Did they give you a piece of bread extra? Did they give you a meal on the side? Like, you know, you think of doing, like what happened in Germany, what happened elsewhere. People would try and help people that were in unbelievable distress. They said, no. I said, all of them. I said, did they ever wink at you? Like, you'll be okay to go cheats? Just one of those things. But we are resetting a table and we're going to have great trade and we're going to have a very strong country. Our country is going to be at a level that it has maybe never been, or maybe, you know, our country was the strongest, believe it or not, from 1870 to 1913. You know why? It was all tariff based. We had no income tax. Then in 1913, some genius came up with the idea of let's charge the people of our country, not foreign countries that are ripping off our country. And the country was never that kind of wealth. We had so much wealth, we didn't know what to do with our money. We had meetings, we had committees, and these committees worked tirelessly to study one subject. We have so much money. What are we going to do with it? Who are we going to give it to? And I hope we're going to be in that position again.
Mr. President, do you plan to reduce the tariffs that your government put on Israeli goods, 17%?
Where?
On Israeli goods, the 17%. Do you plan
Well,
to
we're
reduce it?
talking about a whole new trade. Maybe not. Maybe not. Don't forget, we help Israel a lot. You know, we give Israel $4 billion a year. That's a lot. Congratulations, by the way. That's pretty good. But we give Israel billions of dollars a year. Billions. It's one of the highest.
This just shows you how serious he is about the tariffs, or at least how serious he is about his perception of the tariffs, and in like his negotiation persona not letting down, because you got Israel's prime minister sitting right next to you. And even then, when he's asked about, hey, are you going to renegotiate any of your tariffs with Israel? He's like, no, we pay them enough money. We might not take away the tariffs. Right now, I think there will be some deal with Israel. But the point is, if he's playing the persona of like, I am not capitulating, then we're seeing that in real time. And eventually the market's going to have to figure out how they price that in.
And we give a lot of countries money. You wouldn't believe if I said we give Afghanistan a lot of money, didn't it? Because that was a Biden deal, another Biden deal. Not only did he embarrass us with that, but they give them billions of dollars, Afghanistan, right? So, but no, we take good care of our friends and we don't take care of our enemies. We're not taking care of our enemies anymore, but we do take care of our friends.
Reverence for the Times of Israel. The IDF is fighting to get in the Gaza Strip. I myself might be called up in a month. Do you think that's the way to pressure Hamas to get to a deal? And do you think blocking humanitarian aid is also an effective pressure?
Well, you know how I feel about the Gaza Strip. I think it's an incredible piece of important real estate. And I think it's something that we would be involved in, but, having a peace force like the United States there, controlling and owning the Gaza Strip would be a good thing. Because right now, all it is for years and years, all I hear about is killing and Hamas and problems. And if you take the people, the Palestinians, and move them around to different countries, and you have plenty of countries that will do that. And
All right, so that was the extent of what we got in the context of markets. He was asked two major questions there about the EU. He said the EU is screwing us and therefore they need to buy more of our goods, aka I'm not letting up on the tariffs. And then he doubles down on the tariffs again, saying that we are going to try to get some fair deals. And if we don't, those countries will have nothing to do with us. This is the last clip I'll play, and then I'm going to get into the headlines for the day as we close out the market. This is Trump for those that are just joining just now about tariffs.
You're talking about negotiations, and yet others in your administration are saying that these tariffs are actually permanent. What is that?
well, it could be. They can both be true. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs. We need open borders. We almost had a deal with China where we're going to open up China. It was almost done. Some of you remember it during my first term, and it was very disappointing. We ended up making a great deal. $50 billion worth of product was sold. 50 billion. You'd like that in Israel. And I made that deal, but it wasn't the deal that I wanted. It was the deal that I wanted was that, plus they're going to open up China so that our companies could go into China and compete with other countries and China for for a large number of people. And at the very end, that deal was terminated, and we went to a piece of the deal. And there are a lot of things outside of tariffs, but tariffs are very important. But
AKA, he is not letting up on the tariffs. I think that's the takeaway that the market and investors should be getting right now. Having said that, we got about 7 minutes into the close. Yeah, there you go. Okay, so Nvidia was almost at 100. S&P was green on the day. I guess those final comments that I just played for you guys in the past 10 minutes is what's taken us down. Let's see if we reverse in the next 7 minutes until the market closes. But the explicit, forget doubling down, quadrupling down on tariffs in a variety of ways that Trump has insinuated today, whether it's tweets, whether it's denying the idea that there's going to be any pause for 90 days. Even just now in the press conference, they were asked, hey, what do you think about a pause? He says, I'm not thinking about a pause at all. I mean, he has made it very, very clear that this is the administration's strategy. And we are all about to go on a wild ride over the next, hopefully only few months, maybe few years, we'll see, on if this strategy is actually applicable and can be implemented in any meaningful way. And if it works, who knows? Maybe it does work. Maybe it doesn't. Obviously, I think there's a lot of nuance to how this is playing out. Palantir holding up today up about 4.3% right now. But the market, at least on a day like this, is trying to give the administration the benefit of the doubt by not going down another 4 or 5%. If we were down 4% today, it would be 3 back-to-back 4% down days on the S&P 500. That would be similar to the Great Depression. I'm happy that the market is recognizing that this is not the Great Depression, because I don't think it is. But I also couldn't blame the market for going down 4% today if they wanted to, simply because of the lack of certainties that is still not yet established by the Trump administration. And that is probably why we're seeing some of the pain that we're seeing right now. Who bought the dip? Who bought the dip? I bought the dip. I bought some grabby grab. It's trading at 45% cash. I think that's stupid. Could grab go much lower than this? Sure. Why not? I mean, anything could happen, right? At this point, I don't think it would get below $4, and here we are. But I don't think grabs are moving on anything fundamental. I think this is algos. I think the same thing for Hood, Nvidia. I mean, for a lot of these stocks. So curious what you guys bought. If you bought anything, I bought some grab, but that's pretty much it today. And yeah, being selective in this market, but I can't say it's a horrible thing to get in and buy this dip if we are bottoming. It's just every time I say bottoming, I cringe, because I'm like, what is the logic for bottoming outside of seeing things get so low? And you're like, well, it can't go lower, because that's not a good argument for why things have bottomed. Like, obviously it can go lower. The markets have proven historically they can go much lower. Larry Fink today said he thinks we can go 20% lower. We'll talk about Fink's comments, but I'm hoping there is some level of bottom formation, simply because valuations are getting to the point where they don't make any sense. And as long as we avoid a recession, that'll be okay. But who knows if that's how it plays out. I see some Hoods. I did buy 5 shares of Hood. Nothing crazy. Just bought 5 shares of Hood. So got like the number to be more even on the on the share count. So that's the only reason for that. But outside of that, mainly was Grab today. We got some Teslas in the chat. We got Nvidia, Grab, Google, Hims and Grab, Rocket Lab, Dell. We got some Palantirs in the 60s. Not horrible. Wayne says I have 200,000 in cash waiting on the sidelines. You can't hate that at all. We got some SMCIs. We got some Bitcoins. We got 3 minutes until the market closes. Nvidias. I mean, pretty much everything that anyone is buying today, you should be able to theoretically throw a dart at the market and wake up a year from now and feel like any decision was good if it's at least a somewhat quality company. And a lot of these names, Robinhood, Palantir, Amazon, PayPal, I mean, these are great companies. The question is just when does this officially happen? I did sell a couple calls on Google for 170. I think we're kind of safe on the 170. If we reverse, I'd be more than happy. But yeah, I sold a couple calls there. I haven't sold calls on Nvidia yet just because I'm too afraid that we get a rebound, and selling calls down here might be not the best strategy. I mean, Nvidia can get back to 120, I think, instantaneously. I don't think it's going to be hard for them to reverse. So I'm hesitant to sell calls on Nvidia right here. But you know, I can't blame anyone that's taking a little bit more of a conservative bet against this price action and selling calls against some of these positions as well. So with the market downturn that we're seeing right here, some things are green. So first of all, Bitcoin's green. If we look at some of the spec names, Archer is up 7% today. Again, company with no earnings, shouldn't really be thriving in this environment, but it's up. Oklo is up 11%. Now, a lot of these stocks are down like, 30, 40, 50% over the past couple of weeks. So a little bit of a rebound today isn't that telling, but the fact is that they're getting some momentum. You got quantum names that are actually kind of green today. Look at D-Wave, that's up 3.83%. And then our favorite economic indicator is up 18% on the day, folks. The flight to safety that is outperforming all of our favorite growth stocks. Fartcoin up 16.42%. Again, I don't know what type of market this is. I'm still trying to make sense of it. I don't understand people fleeing to Fartcoin as a mechanism for safety outside of, these amazing assets that are down 40, 50% of the stock market, but it is what it is. It is what it is. I guess hot air does rise, and that's what we're seeing with Fartcoin. We have about a minute until the market closes. Got a bunch of other headlines that we'll talk about as we get into the close. Rough day in a lot of different sectors, just emotionally as well, going through the ups and downs of the market. But the overall, actual market has not been hit as badly today. I mean, S&P only down 0.3% is way better than being down 4.5%, which I guess we can be grateful for. But the lack of certainties continue to remain. We have, after this market close, one trading session left until Trump implements the reciprocal tariffs across the entire world. So he has 24 hours to kind of change his tone on that. And if not, then we're going to see ultimately how the market decides to price that in. All right, Monday, April 7th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, there we go. Another day is done as we end out the trading day. Can you believe it's only Monday? It's only Monday, bro. It feels like a Thursday. It is Monday morning, or it's Monday afternoon at this point, and we are officially done with the first trading day of the second week of Q2. S&P 500 down about 0.17%. Archer is up 7% of the day. Nvidia up 4%. Grab was down 6.7%. Tesla down about 2.5%. Bitcoin actually up about 0.5%. MicroStrategy was down 8% of the day. Palantir was up 5.18%. Palantir again got to 65.40 at the very lows when the market opened, and then rebounded right here, 77.84, up about 5.8% of the day. Hims was up 6.85%. TQQQ was actually green because the Qs were green, up about 0.24%. Newsmax was up 5% on the day. Doesn't make a lot of sense to me, but that is green. Meta was up 2.28%. Nice little rebound. SoFi as well, up 3% on the day. TSM going flat. FXI, China down 8%. Europe was down 3.13%. VGK, Vanguard's Europe ETF, that one was down about 3% of the day. Google was up about 0.79%. Robinhood was up 2.6%. Rocket Lab was up 7%. Coinbase was down 2%, primarily due to Bitcoin. Nike was down 2.76% with that China exposure. Carnival Cruise was flat on the day. Costco was down about 1%. on the day. VG Venture Global, that was down 7% on the day. So some of the energy companies definitely took it on the chin. Yeah, Oxy down 4.4% as it looks like WTI crude is going below 60. Right now it's just hovering above 60, but if that goes below 60, maybe not the best for the oil companies. In terms of the Max 7, Apple was down 4% of the day. Microsoft was down 0.5%. Meta was green. Google was green. Amazon was up 2.49. Weird that Amazon went green, but Apple went red. I know a lot of Apple supply chain is in China, but a lot of what Amazon sells is also on China or from China. So that is kind of weird that Apple and Amazon didn't go congruently up or down. And then you had Tesla right here down about 2.56% on the day. So that is what we got to end out. Yeah, the pseudo Black Monday. Shout out to Jim Cramer. He did say we would have a Black Monday. Thankfully, we didn't really have a Black Monday. But yeah, regardless, it was a rough day, kind of just seeing how the emotions of this market took it up or down. A lot of people are asking how I personally feel. I'm fine. I'm not like, I maybe my tweets might show I'm a little, like agitated or whatever. Like I posted under Trump's picture with the Dodgers. I was like, wow, such a great picture while trillions of dollars are lost. Like so much winning. Like that's just to be funny. That's not really to voice how frustrated I am or anything like that. To me, this is like, look, to me, the good thing about, this stage of my life is I have time. I can get through this. I can add capital to the markets. And quite frankly, I want to deploy more capital at these moments. And so I as much as it's annoying to see down equity prices, I know that 5 years from now, I'll be happy if I buy this dip. What's more so annoying about this is how it happened. And I said this on Friday, but I don't think people are mad that their stocks are down. People can handle, especially investors, they can handle stocks going red. It's the reasoning behind why they go red that really usually pisses people off. And for a year's worth of gains to be wiped out in 3 days because of what seems like not the best reasoning, in my opinion, based on how I'm trying to understand this tariff policy, I think that's why people are upset. And I think people deserve to be upset. But nonetheless, this is kind of how everything's playing out. How does your sister feel? Dude, honestly, she's numb to it now. She doesn't really care. Dude, she was rich with me a couple months ago and now she's poor again. So she's right back to normal. So no, my family's actually taking it pretty chill. I mean, like my dad's following the news updates every day. I mean, like no one's super emotional or upset because, no one in my family is really taking money out of the stock market to pay for their bills or expense their lifestyle. So at the end of the day, it's money that theoretically they can afford to lose, but they're along for the ride. Also, they were kind of investing in 2022, so they kind of feel like I was more so the one in the family that was investing back then and had to deal with that downturn. 2020, I wouldn't even say I really experienced it because I didn't have a ton of money in the markets. But 2022, I think I did a decent amount. And, you go down 50%, it's not the best. But I think right now everyone's trying to make sense of what's happening. And there's not much to make sense of other than the fact that Trump is hell-bent on these tariffs and this policy looks like it's going into effect. Tesla right here up a little bit after hours. The S&P 500 also up after hours. I don't know if there's any headlines. We're up about 0.5% after hours. I don't think there's any major headline here that's causing this. This could just be algos. Let me take a look. Yeah, nothing here. This is likely just algos. There's no, Trump didn't say anything crazy or nothing. Yeah, no. It's just markets after hours doing what they do after hours. Okay, Tom Lee. Now, we talked about Kimball Musk, which if you missed it in the beginning of the show, Kimball Musk actually not apologized. Tom Lee apologized, but Kimball Musk went at Trump pretty explicitly today and basically said he's the dumbest president ever with this tax policy. Again, my sort of conspiracy theory here is that Elon feels exactly the same. I'll put the link in the chat for those that want to read this. And Elon can't say it because Elon has definitively kissed the ring at this point, so he can't say anything that it goes that much against Trump. Elon did post a Milton Friedman post today, which was kind of like a subtweet at Trump because Milton Friedman was talking about why tariffs might not be the best idea. But I think Elon co-signs this post by Kimball Musk, and you are starting to see more and more business leaders, along with Larry Fink, Bill Ackman, et cetera, that are coming out and they just hate this tariff policy. And they're letting it be known how much they hate it. Now, Tom Lee himself has issued an apology. Here's what Tom Lee said today to clients. We want to apologize as the terms of the Tariff Liberation Day were far worse than we expected. The resulting market fury is not due to a reaction to a trade war, but rather the fact that the White House broke a core covenant of capitalism. I mean, It's pretty damn incredible, right? The fact that Tom Lee is saying, hey, capitalism, a core covenant of capitalism, has been broken by the Trump administration. That is his argument around why he's apologizing. In my opinion, Tom Lee doesn't need to be apologizing. Essentially, he's apologizing for not knowing how crazy the Trump administration was. And if that's the case, no one did. Or no meaningful public money manager that I understand it was out there saying, hey, sell everything because Trump's going to have these crazy reciprocal tariffs. Like, no one really what Tom Lee is really apologizing for right there is not being able to read that Trump was that crazy. And it turned out Trump was that crazy in terms of how he implemented these policies. And so, even he's coming out with a note to his clients basically saying, yeah, we didn't realize it would be this bad. And it ended up being this bad. And now the markets have to deal with the fallout of what's happening right now. So that's what we got in the context of Tom Lee. I don't think there's any Iran news after hours, guys. There's nothing super crazy. I mean, let's get a quick update right here, but I know the S&P is up 0.5% after hours. I don't think it's because of any major headlines.
Angle there, but
Benjamin Netanyahu of Israel, the president of the United States, saying he is not considering any type of pause in terms of tariffs going forward, and in fact, doubling down on his threat to impose an additional 50% tariff on China if that country doesn't lower its retaliatory 34% tariffs on the United States. So the president here holding a firm line and explaining that he feels that he has a once-in-a-generation shot here to reset the global trade table, as he put it, in terms of the U.S. Relationship with countries around the world. Interestingly, Morgan, in this Oval Office session with Benjamin Netanyahu, the Israeli prime minister said that Israel is committing to President Trump that it is going to lower its or eliminate its trade deficit with the United States. So the implication there is Israel is going to find some way to buy a lot of American stuff and do that pretty soon. And what President Trump is...
Yeah, and that's pretty much what we looked at in the beginning of the show. I don't think there's any major headlines. I mean, yeah, we're green after hours. It could just be algos being algos. If we get a even deeper green move, then we'll see if something's going on. But markets were pumping into the close, so it kind of makes sense for that to continue after hours. Tesla right here up about 2%, Grab's up 0.5%, Nvidia's up 1/3%, Archer's up 0.5%, the S&P 500 as well up about 0.5%. Look, in my opinion, a year from now, these are going to be great prices that we had a chance to buy equities on. And I think barring any economic recession, and we'll talk about the Fed in a second, I think that these are going to be amazing prices for long-term investors to DCA. And maybe it takes more than a year, who knows? But I do think long-term, these are not going to be prices that people are going to be upset about buying. If you were willing to buy Hood at 60, now Hood's at 30. You're willing to buy Nvidia at 140, now Nvidia's at 97. You're willing to buy Meta at 715, now Meta was at 480 at one point today. Like, these are obviously prices that are being hit via algos with mass selling as a result of whatever the market's interpreting with tariffs. But eventually there will be a bottom. I don't know when. I don't know how. This is why I'm also not selling. For anyone saying, Amit, are you selling anything? No, I'm buying more. I'm not. If I was going to sell, it would have been February 19th. It's not today. Because the idea that I can time the bottom is like, well, Nvidia's going to 70, so I'm going to sell at 94 and then buy back at 70. It's like, some people can do that. I can't do that. I'm not going to do that. So as a result, that's not my route. Shout out to Mr. Derek Wall. Derek, your May 1st, 2025 car payment. Derek, I appreciate you, brother. Look at Derek, bro, just swooping in, saving the day. Thank you, Derek. I appreciate that. A lot of people are worried about me, bro. A lot of people are like, yo, can you make the Tesla payment? It's like, yes, guys, I can make the Tesla payment. The payment on the Tesla will be made. It's okay. We're all right. I'm not taking money out of my Robinhood account every single day to pay my bills. Like we're doing all right from that perspective. But obviously everyone's feeling it. And the wealth effect is very real. So I appreciate that, Derek. I will definitely be using that 500 to pay for the Tesla as well. But look, I think the wealth effect is real. I know I make jokes about not getting a manicure pedicure because I'm not rich anymore or whatever. But to be serious about it, everyone to an extent might take back some of their consumption, even if you're super rich, just because you feel like, hey, I want to hold on to a little bit of my wealth versus spend it. When everyone feels like everything is great and they're rich and they're compounding their assets every single day in terms of price appreciation, whether that's crypto, real estate, or the stock market, you're more likely to spend on services that you probably wouldn't spend on. So And I've never been a really materialistic guy. I mean, literally, like, these are these are my slippers, bro. They're beat up. I don't buy shit just to buy shit. I've never been a big spender. I've never had a spending issue. Which is why I've been able to save up a decent chunk of money, and it is what it is. But the point is, like, I think that everyone's upset not because the stock market is down, but because of why it's down. And that's why people are upset. That is why people are upset. I also am upset that my Saratoga water bottle called the top. Like, I can't drink Saratoga anymore, dude. And I really like those bottles. They're great bottles. So I next time I drink that, you guys are gonna get mad at me because it's gonna be calling a top. And so I can't do that anymore. But that is the reason why I think everyone is so upset right now. Okay, so let's talk about this, and then we'll get into some other headlines. We'll talk about the Fed. How is everyone doing money-wise in just like with this downturn? Obviously, a lot of people have their net worth correlated to the stock market, especially if you're watching. Those of you that are older are probably a lot more diversified into other assets as well. I think as a rule of thumb, no one should be investing with rent money, right? If you got to pay, or your Tesla payment money, right? If you got to make a $500 Tesla payment, you probably shouldn't be putting that into the market. You should be leaving that $500 to pay for the Tesla. So from that perspective, I feel like if most people are investing with money that they don't need, I feel like most people should be okay. And like, yeah, you're allowed to be pissed off because everyone's pissed off, but like, it's not one of those things where you're literally saying, holy crap, I am screwed, right? Unless you're super levered up on margin, which obviously also is not the best thing in the world. But if you're not in that situation, then it quite literally is paper losses, dude. As much as they were paper gains, they were paper losses, but it's not like you needed to freaking sell for whatever reason if you don't need that money to do whatever you need to do. Now, one thing I think that is important to understand as well is that April 15th in the United States of America is tax deadline day. I think there might be some more selling to pay people's taxes. And thankfully, I was able to sell a bit in March at much higher prices than the current prices right now. So I was able to take that money out of the market and pay my taxes. But I think if you've been waiting until the very end to pay your taxes and to sell some stocks, now if you have to sell at these lows, it must be gut-wrenching. If you could have sold, 1,000 shares of NVIDIA at 120 or 115 to pay your taxes, now you have to sell at 97. Like that's the part that's definitely probably hurting a lot of people. But that could also continue some more downside pressure in the market in terms of people paying their taxes. Derek says, I went deep in hood. Happy about that decision. Derek did indeed go deep in hood. He texted me a screenshot last night of, let's just say, a lot of hood that he bought at $29. So hood right here at 35.41, got a bit of a move up to the upside. But this is also what I'm saying, right? If you're someone like Derek, who's a bit more of a high net worth individual and has cash on the sidelines, a lot of it, then you can deploy. Which is why, this whole idea of the administration saying, oh, well, if you haven't bought into the market, like now it's cheap, you can buy in. I'm like, well, people that actually have a ton of cash can do that and they can continue to compound their wealth. People that are living paycheck to paycheck aren't going to buy the dip on NVIDIA, And so still amazing opportunities that are out there that you should be taking advantage of if you have the cash on the side. But if you're not, I also understand why people are not taking advantage of this stuff just because they might not have any money. Most of the sentiment I'm getting right here from the chat is I'm feeling fine. Obviously, we got some people feeling very poor. I understand that. I'm poor with you now. I was rich for a bit. It was awesome to be rich, dude. It was great. I told you guys, it was awesome. For about a month and a half, got to live the rich life, dude. Like, it was really fun being rich. Like, I really hope I get back there again because that was a fun time, dude. Not having to worry about money. Like, holy crap, dude. That was great. It was amazing. Like, it was seriously fun, dude. Like, I would just step into a store. I wouldn't even look at the price tag. I'd be like, I got it. No worries. Now we're back to being poor, Gotta get that resiliency back up like it was so many years ago. Sam says, this is what we want as 30 to 40-year-olds. We want to accumulate. Yeah, and look, and here's the thing as well. I mean, I've heard this comment a lot throughout the day of just like, you should be happy with these prices because it gives you a chance to accumulate. I don't disagree with that sentiment. I think that's a fair sentiment. Obviously, the wealth effect is kind of annoying, right? Because you go from rich to poor, but like this is where you get rich when you buy these stocks that are down so much that had nothing fundamentally to ruin their perception. It had everything to do with macro-related stuff, aka tariffs. So I do heavily agree with this idea, which is why I'm not selling and I am trying to put more money into the market. which is that these are prices that you should be happy about. Like, I don't need NVIDIA to be 200 today because I'm not planning on selling NVIDIA for the next few years. So if it comes back down, it comes back down, and it is what it is. But these are moments to take advantage of. Scott Galloway says this is permanent damage. Multiples will never be the same. Okay, so that I do disagree with some of the doomers that are out there that are saying this is permanent damage. Nothing's going to change. Like, we're never going to get these multiples to come back. Yeah, no more Lululemon hoodies from dude. That was the top as well. Buying a 100. I knew buying a $150 hoodie would never be good for me, and it literally marked the top of the dead cat bounce, which is so sad. But yeah, I don't agree with all the doomers out there that are saying this is irreversible damage. Like, I think it's bad damage. And if the tariffs actually go into effect, then yeah, maybe it does become irreversible. Like again, those crazy charts we looked at on April 2nd, where all these different countries having different reciprocal rates. If that goes into effect in 48 hours, I think there's a world where, yes, it could be irreversible damage. I am still of the belief that that exact list that we saw is not exactly going to go into effect the way that they have told us it will. Maybe that's just wishful thinking. And if that's the case, we can get some reversals, and those reversals will be beneficial for multiples, margins, etc. But if Trump really is going to implement 104% tariffs on China, which is what he announced today, an additional 50% tariff on top of the 54% that we have on China already. This was announced at, I think, 11 a.m. Then I don't know what to say to this insanity. I don't know what to say. I really don't. If anyone thinks 104% tariffs on China makes sense, all right, cool. I guess we'll see how this plays out. Because one of two things is going to happen. Either China's going to tariff the shit back out of us, and then we just stop our trade agreements with China, and then we don't trade with them anymore, which I don't even want to know the economic impacts of what that'll have, what that will have on our society. Or two, we literally will only buy stuff that's made in the United States, which I don't want to know what impact that's going to have on society, given I don't think the cheap goods that we're all used to buying from Amazon that are imported from China or from Shein or Temu or whatever, like if we buy it in the United States, I don't know what that's going to do to consumption, because the average American does not have that much money to spend on basic goods. So, I mean, if this is going to be the core policy of the administration, we'll see how bad that hurts multiples over the long term. I'm just refusing to believe that that's actually what gets implemented. Broadcom's up 5% after hours because they just announced a $10 billion buyback. Okay, so that's cool. It also feels a little desperate right now, announcing something like this. Like, to be honest, dude, if Tesla announces a buyback, I don't think that's bullish. I know a lot of people have been rumbling that Tesla has plenty of cash. They could announce a buyback. First of all, Elon's not that type of guy to buy back his stock. Elon likes to put money to use and actually allocate that capital. B, I just think it would be one of those things where it's like, nothing's working, so we're going to buy back our stock, which technically is the right thing to do, right? Because these stocks are in such a bad space. But I don't think it's enough for that to be a pump. Like, I don't think the market should be like, oh, that's great, Broadcom's buying back their stock. It's like, yeah, awesome. They're fine. They're buying back their stock. But a lot of it is in response to the fact that their stocks have been cut in half. And instead of that money being used on growth, it's just being used on buybacks, which is, again, good. But if sentiment doesn't change around tariffs, I don't think that's going to matter. I don't think that's going to necessarily change the perception of what's happening right now. But that is one of the headlines that's helping Broadcom get up. Why did Tom Lee apologize? Tom Lee apologized essentially for saying that he didn't realize that a core covenant of capitalism would be broken today by Trump. That's literally the words he used, which is crazy, dude. I mean, like, that just shows you how upset that Tom Lee is about this. And it's not just Lee, it's across the board on Wall Street. All the S&P 500 targets, by the way, outside of BMO Capital, have come down from freaking a high of 6,500 down to, I think the lowest I saw was 5,000 today. A lot of them are in that 5,500 range, which is about a 10% bump from here. So, which is crazy, right? Because a lot of the analysts took down their targets from 65 to 55. We were at 5,200 today within seconds of any report of tariffs being delayed, which just shows you we would have blown through 5,500 if, like, actually tariffs are full off the table, right? And we would probably get closer to the 6,000s, even if not today. It would be rather soon, in my opinion. The market is ready to have a violent reversal, but that headline ended up being fake news, and then the market had to come to grips with the fact that the tariffs are not being delayed. And then Trump verbally said it today that the tariffs are not being delayed. So I don't know if those S&P 500 targets are too low, given we might get some deals and then we just rip through it, or are they baking in the fact that they can't believe that the tariffs are actually going to go away, and because of that, they're factoring in a modest level of momentum on the S&P, simply because of how bad it would be if we had those tariffs. Real quick, here's the coverage on the Broadcom buyback right here.
Cent range, briefly touching bear market levels, and program CEO has never been stronger. Yes, that they are still working further to carry.
Oh, we got Levi. Okay, let's see what Levi had to say as well today, and then we'll keep going.
Levi Strauss earnings they're reporting an adjusted earnings per share of 38 cents on revenues of 101.53 billion, I should say. Now, Levi is not including Dockers in the results because it's exiting this business. So we're not going to compare the results to analyst consensus, because while Levi had said it was exploring alternatives, we don't know if analysts were including or excluding the Dockers numbers in their estimates there.
Okay, let me get back to that in a second. Everything is up after hours. I don't know why. Let me try to find out the details. Robinhood's up 1%. SP has to be up at least 1%, or that's up 0.5% still. Nvidia's up 1%. Grab's up 1%. I don't think there's a headline, guys. I think it's just after hour algos, but it is across the board, which makes me feel like there has to be a headline. The Broadcom buyback program can't be the headline. Basent's on Fox. Let me see. Let me see if is he on Fox? Let's see. Fox Business. Let's see if we can get him live. Maybe he said something that the market likes. That could be something happening. Okay, here we go. Here's Basent. Wait, is he gone? Yes, he's gone. Okay, I missed it. He just finished talking. I missed it. He just finished talking. So whatever he said, I guess, could have been bullish. Palantir right there, 79. Yeah. Now, if he said something along the lines of a delay in tariffs or further negotiations or deals, like, yeah, I guess the market could be moving on that. But he probably is not going to be as explicit because the White House caused a bunch of issues today, assuming that there was going to be some 90 delay tariff. I'll get the Basent clip in a second from Fox, but he might have said something that's getting the market to get excited. All right, here's Levi's, and we'll keep going from there.
Gross margin coming in, though, above 62% at 62.1%, operating margin 13.4%. Levi is reaffirming its previous guidance. Now, I spoke briefly to the CFO and CEO about the results, and CFO Harmit Singh said prior to the tariff announcement 5 days ago, we were debating whether to carry forward this 10-cent beat to full-year earnings guidance. But given every day there's a new twist, we felt it best to maintain guidance. We have a task force working through different scenarios. It's a very fluid situation, and we are working through different levers that we can pull. Now, CEO Michelle Goss told me, quote, "It's still early days. We are getting our arms around the issues. We source from 28 countries, 20 into the U.S., and no one country accounts for more than 25% of production. China is less than 1%. We come at this from a position of strength. Our brand has never..."
Okay, so Levi's saying we're going to get through the tariff stuff. That's why their stock is up right now, which is good. If we get a lot of companies give us this type of energy, which is that we're going to be able to navigate this. Again, Levi's is one company. We're going to need a lot more confidence coming from CEOs, but that's not the worst thing in the world right now.
Been stronger. We are gaining market share, and we are at the center of culture globally and locally. Now, of course, the company putting out some SEC documents here, and I should note that in the 10Q, they do note, yes, that they are still working through things, but that these tariffs announced on April 2nd will have a material impact on the year.
Okay, so Basent said on Fox News, so that was good by Levi's. That was some helpful stuff. Basent said 70 countries have approached the U.S. on trade. 70 countries, and he said Japan will get their price. Okay, so he said two things that it seems like the market likes. A, Japan is negotiations with Japan are working out. B, maybe 70 countries have approached us by now on trade. Okay, so he said what I thought he said. What I thought he said was there was something good with negotiations, and that's essentially what he said. Okay, that's not bad. That's not like amazing, but that's not bad either. So if 70 countries have approached the U.S. on negotiating, they've got a day to make some deals. I mean, look, tomorrow if they announce 70 deals, I mean, like, I think the market's going to be pretty, even if it's not China and the EU, I think the market's still going to be happy about that, which would be bullish. Will they announce 70 deals in a day? I mean, it wouldn't be unlike Trump to try to pull something off like that. Markets are getting a little bit of a haircut after hours. They were super green. Tesla was up almost 2%. Now it's up 0.5%. S&P 500 declining a little bit, even though it's still green. Same thing with Robinhood, Broadcom, etc. But we are getting a little bit of green after hours right now. I wonder how the market will react, though, right? Because at the end of the day, China and the EU are what they care about, not the 70 smaller countries that we do work with, which do matter. It's just, and it's like a helpful sign in the right direction that we're going to eventually negotiate with the big ones, the EU and China. But until we get those deals done, I don't know if the market's going to care. Yeah, we got to get some deals with the Penguin Islands. We have to get some deals. Okay, Dan Niles on CNBC. Let's see what he has to say about this. He's been in cash the majority of the year. Let's see if he's getting ready to buy any of the dip.
Down here for the S&P. So assuming that happens, assuming we fall further at some point here in the near term, we get even more washed out. Some of those technical levels are realized. Some of those valuation metrics that you just mentioned are realized. What would you be nibbling at first?
Well, I think it's very company specific. So I think, there are certain names that I went into recently, but the big thing I would focus on is which companies are generating a lot of cash, which ones tend to pick up market share during recessions. Those are the types of names that you want to be in, because if you're in stuff where, 10 years from now, it's going to be a big market, you're going to get absolutely murdered if you get into a recession. And so that's the stuff I would avoid, I guess, in that scenario. And don't forget, even if you go back to the global financial crisis, when the S&P was down 57% from peak to trough, you had 11 rallies in the S&P 500 of 10% each, 11 of 10%. And I guarantee you're going to get, or you can't guarantee, but it's highly likely, given what happened the last time, that you're going to have stuff like that happen again. And you're going to have the bullish analysts come out yet again and tell you how the market's going to be up 20%, trying to ignore valuations. But I think until you have the economy settled down, you want to stay in the cash generative names, profits today, not 10 years from now, where the multiples discount the risk. And I think the AI trade, now that you've reset some of these valuations a lot lower, those are some of the names you can go back and look at, and that's some of what we did today.
Is the U.S. still the best game in town? There's a lot of talk, a lot of focus on it's time to, U.S. exceptionalism is going away, diversify international markets. They're going to perform better this year. Bespoke tells me this afternoon the average decline since Liberation Day across 45 country ETFs is 10%. Yes, it's a self-inflicted wound, but we're inflicting it on everybody else too right now.
Well, are we? Because here's the thing, Morgan. If you go to Friday, where we have the exact numbers, the S&P is down 14% year to date as of last Friday. The global stock market, excluding the United States, was up 0.5%. Mexico, who we're having obviously big fight with, that was up 4% if you look at EWW. If you look at the Eurozone ETF, EZU, that was up 2% as of last Friday. Sorry, that's actually as of today. I don't know where the global is excluding the US. So my point is that the issue coming into this year was everybody thought the US was the only place you could win because you've got, AI and US exceptionalism. And so you're valuing these companies at levels that make no sense relative to the rest of the world. DeepSeek shows up and you kind of figure out, you know what, maybe China at half the valuation levels for some of their AI companies are actually at a third levels at one point. Maybe those look kind of interesting. And so I think the good news about this is investors, for the first time since really ChatGPT showed up, are going to look at companies around the globe and go, where am I getting paid to take on the risk? And are there other regions besides the US, like China, for example, where if you look at KWeb, right, it's flat year to date.
Okay.
Magnificent Seven are down 24%. And so that gives you an idea of risk to reward and as it relates to your US exceptionalism.
Okay. Dan Niles, great to get your insights on it.
You know, it is quite interesting. I think the Mag 7 are the best companies on the planet. Yes, their valuations, like an Apple, I agree, was overvalued at some aggressive levels. Not saying Apple's the cheapest here still, but it is very funny how the world is rotating out of the 7 best, incredible companies on the planet. Obviously, Tesla has their own earnings issues that are coming up, but still, the Googles, the Nvidias, the Metas of the world, the fact that money's leaving those companies that can buy back their shares, amazing free cash flows, incredible net income margins, and going into other parts of the world that are really just not going to get you that same type of juice, outside of the fact that those places have been dormant and maybe there's going to be a resurgence in some level of momentum there, aka China and Europe. It is quite interesting to see how that's playing out, especially if these companies can keep up their earnings growth, which obviously that's the number one question now going into Q1, which I think is going to be good. Q1 is going to be good across the board. It's going to be Q2 guidance, or the lack of guidance, that I think is going to suck for a lot of people. But it is interesting. It is really interesting to see the market saying that, yeah, these Mag 7 companies are so unbelievably overvalued and expensive that we're going to rotate out of them. Which also, again, Meta going from 480 to 516 today, I think that's emblematic of the fact that the valuations aren't that crazy. The market knows the valuations aren't that crazy, and any good piece of news they can get their hands on, they will take some of these Mag 7 names higher, given how low they've gotten. But it's going to be a lot more than a fake 90-day headline to get the markets excited. And in 2 days on April 9th, we will find out how aggressive these tariffs end up being. I mean, literally, we don't have to wait long for this. In the next 24 hours, we will know if there's any deals, if we're actually implementing 104% tariffs on China, and if the EU is going to get another 20 to 30% from us. And if it is, then I guess the market will have to figure out how we react. I'll ask that question in the chat right here. I mean, again, we ask this every day, but I think this one's also important. This is not really a dead cat bounce, in my opinion, but who thinks, or do you think we can continue the green tomorrow without any new deals, aka trade deals? I don't know, bro. Maybe we can because of just how oversold everything is, but I think the reason we pumped overnight is literally because Percent just said 70 countries reached out to us. The market's like, okay, 70 countries reached out to you, which means you're going to come up with 70 deals soon, right? So, oh, we have CPI on Wednesday. Holy crap. Okay, so that transitions us into the Fed. Let's talk about the Fed. First of all, for the Grab event, you guys are asking my expectations. I have no idea what to expect. It'll be at 10 p.m. The Grab event, live Eastern. So if anyone cares about Grab, I'll be live at 10 p.m. covering it. I have literally no idea what to expect. Why is the microphone being so bad? Hold on. What's going on? Let me switch my mic. Hold on. Okay, how about now? Is now better? Is now better? Why was the mic? Did my mic get tariffed? Are we good? My mic get tariffed. Okay, hold on. Let me switch again. Hold on. Give me 1 second. Let me switch. Let me switch the audio. Let's see. Is that better? Yes. No. Is it still? Should be good, right? Should be good. Yes, yes, yes. We're good. Are we good? We're good. Yeah, we're good. We're good. Why are you guys saying no? We're good. We're good. We're good. We should be good. We should be good. Okay, cool. So, hey, don't say I'm muted, bro. Why are you guys saying no? It should be good. Why are you saying no? Hold on. No, it's good. Like, I'm listening to it on my phone. It sounds fine. Don't be fucking with me, bro. This is not the day. This is not. We're done with April 1st. All right? We're done with this. Now I can't even trust the chat, dude. I need one person in the chat I can trust when you guys decide to do this whole let's like make him think that he's losing his mind thing. I need one person I can trust. Yeah, I'm not muted, dude. Crap, dude. The mic actually was messed up 5 minutes ago, though, but I'm not muted. Okay, we're good. We're good. You guys are something else, bro. On a day like this, you guys are something else. All right, so the Fed. Let's talk about the Fed. Here's what I'm thinking when it comes to the Fed. I don't think the Fed is going to be able to help Donald Trump in this situation. Now, why is that the case? It's pretty obvious to me. The Fed has said that they feel that tariffs are inflationary, right? If they think tariffs are inflationary, then this isn't 2018 where we put tariffs on one country, aka China. We are putting it against the entire world. Again, there is still a part of me that believes that this tariff policy is so insane in 24 hours, it won't actually go into effect. But if it does, and if it is the law of the land over the coming months and potentially years, then inflation will go higher. And it doesn't even matter if I'm right about that. The Fed thinks inflation is going to go higher. Inflation's already up 40 basis points from September when we were at 2.8%. Last month in September, we were at 2.4. So the Fed is not going to cut into an inflation spiral driven by tariffs and risk their 2.8% going to 5%. When will they cut? When it becomes obvious that growth has slowed down, aka a recession. The problem here, which is not really a problem, but it's a technical problem to get the Fed to cut, is that job growth is amazing. The labor market is better. It's as good as it's been in the past year. 228,000 jobs were added. And we're not seeing massive layoffs, and JOLTS are showing 7.5 million jobs are available. Now, you can say, oh, these numbers are fake. That's fine. But as long as these numbers keep coming in the way they're coming in, and we don't really see any meaningful decline when it comes to the labor market, aka people getting fired, then they don't have a growth slowdown as a reason to have some emergency cut. A lot of people fell for that emergency meeting headline. That was a regular meeting they were having. They were probably talking about the potential of emergency cut, but it wasn't like they have this random meeting today because they needed to discuss an emergency cut. Jay Powell knows that if we get into a recession, which is what might need to happen to bring rates down via the Fed, then this will be a Trump recession. This will not be on Jerome Powell's legacy. He knows this. And I quite frankly think no one's going to blame Jay Powell for any of this. Like, history will not be mad to Jay Powell if we get into some cataclysmic recession driven by retaliatory tariffs. It won't even be against the Republicans, the Democrats. It'll be against Trump. It'll be Trump and Trump alone who's going to have to deal with this. And then Howard Lutnick, I was going to say Nutlick because you guys keep spamming that, but Howard Lutnick will be in the corner of that photo. I don't even think it's Besant's fault, to be honest. This is Lutnick and this is Trump. This is not Besant or Jay Powell or anybody else. So my point is, Jay Powell is not going to try to save the markets because he doesn't care about the markets. He cares about inflation, number one, and he cares about the labor markets. Inflation is not coming down that dramatically. Now look, CPI on Wednesday, let's say it goes from 2.8 to freaking 2.3 or 2.2. Then, yeah, he has an argument to cut because we've had such a dramatic decline in inflation driven by shelter or whatever it may be, that there is a logical argument that even if we are increasing tariffs because they become so inflationary, we can still cut in the midst of that. And I think there would be a lot of pressure politically for Jay Powell to cut, and he might give in to that. But if we come in at 2.7, 2.8, like this is not going to be good, right? This is going to be disgusting. This is going to be bad inflation that we don't have a realistic chance of dealing with because the tariffs are only going to put fuel on the fire. So if we have sticky inflation and we have tariffs that are only going to fuel the fire on that inflation, Jerome Powell will not cut rates. And if he does, he will have no way to justify it because the labor market is not bad unless he says this is a preemptive cut because we think we can get into a recession, right? Because we think things will get so bad. So I'm preemptively cutting before it gets that bad. I think that would freak out the markets even more. Because then the markets would be like, oh, so you legit are afraid of a recession. And I think at that point, does a cut even help? Versus people thinking if the Fed thinks that they need to preemptively cut before a recession, then why the hell are we still in stocks? That could definitely get bond yields to come down. But again, that's in the face of a looming recession that Jay Powell might be worried about. So, CPI is Thursday. Usually it's a Wednesday, though. Is it Thursday? CPI this week. It might be Thursday, Friday. You might be right. It is out April 10th. Yeah, that's Thursday. Yeah, Thursday. Okay, cool. So we get CPI Thursday and Friday. All right. So I think regardless of the CPI numbers, unless they're dramatically down, the Fed's not going to save us. So for anyone thinking that the Fed can pump liquidity into the market, this is not 2020 where there's a global pandemic. They're going to take rates down to zero. Rates were already kind of close to zero. And they're just going to have infinite quantitative easing and its asset prices are going to go to the moon. Like, quite frankly, in 2020, I wasn't that deep into the markets back then. I was paying attention to it, but not like as deep as I am on the day to day. I was actually like enjoying my life at that time. But like when like, I mean, it wasn't that crazy. Like, you didn't have to be a rocket scientist to figure out, oh, there is massive levels of liquidity, not to mention the stimulus checks that are coming into the market or that coming into the economy. The only place that capital can be allocated, if there's no money market fund giving you 4.5%, or gold is not the safety right now, or the hedge that people are thinking that it is, it's stocks. It's stocks and crypto. And what happened? Stocks and crypto went to the literal moon, resulting in GameStop getting to almost $500 a share. Right? So we're not in that environment. We have inflation to deal with. And because we have inflation to deal with, Jay Powell can't just pump liquidity. He can't just give us infinite quantitative easing. Also, it's not as bad as the pandemic. When the pandemic was happening, people literally thought like it was the apocalypse. We're not in that right now. We can switch the tariff policy overnight. And so I can understand, as a central banker, your intention to say, I need to do everything to save the economy right now. We're going to take rates to zero. We're going to print as much money as needed, yada, yada. They're going to slow down their quantitative easing a little bit. That's what they said at the last meeting. So not as much quantitative tightening as before, but that's not enough to pump the stock market. And they're also not going to, we're not going to give out stimulus checks or anything like that. So the point I'm trying to make here is the Fed is not going to save us from these issues. It's going to have to be Trump reversing some of his tariff policies, or the tariffs are going to have to work. We're going to have to raise the hundreds of billions of dollars that Peter Navarro thinks we can raise. We're going to have to start manufacturing in the United States and not increase the cost of goods and get people to buy American. Like, either Trump's like view of the world plays out or he reverses course. But I don't think it's going to be the Fed. I don't think it's going to be the Fed that saves us in this situation. And that's what I'm thinking right now in the context of the Fed. Does anyone disagree with that? Does anyone think the Fed can actually solve this? Because like, I'm hearing some takes that, oh, the Fed's going to step in. I'm like, what are people smoking? Why would the Fed step in? Why? How is the Fed going to step in? Jay Powell has been hellbent, Goolsbee, all these guys, Waller, on getting inflation back down to 2%. You think they're going to dump rate cuts when they have explicitly said, we think tariffs are inflationary? Like, here's a question. Do you think the Fed can bail us out? And also, the markets, look, the markets are down, and where's the S&P year to date? Like, COVID, like year to date, it's down 13%. That's aggressive. That's bad. From my understanding, COVID was still a lot worse than this. I mean, the most we had was a 6% down day. COVID had a 12% down day. So I also don't think the markets are in so much turmoil. Like, we're not like 3,500 on the S&P or something, where Jay Powell just feels the pressure building up and he has to lower rates. But if we did get to 3,500 on the S&P, we're probably in a recession. So he's probably justified to cut rates at that point, because growth is going to slow down. And if growth slows down, inflation slows down, so he can make the argument. But right now, he can't make the argument. I mean, even at the press conference last week, he was getting grilled on why the Fed is even thinking of 2 rate cuts this year. Because if you look at the labor market, you look at inflation expectations, there's not really a reason for the Fed to cut. So the idea that they would have some emergency cut now, based on the idea that the tariffs won't be as inflationary when they said the tariffs would be inflationary, to me doesn't make a lot of sense here. And that is also consistent with what Larry Fink said here today. So Larry Fink said a couple things today. Larry Fink said, I think there is a greater shot than not of a 20% decline in the S&P 500 from here. And then he said something that I don't agree with, but I mean, if it actually gets that bad, then who knows? He says there is a chance Jerome Powell can hike in 2025. Now, look, I don't think that's the case. I think that's peak fear. I think the only way this could happen if the tariffs are literally so unbelievably inflationary that the progress we've made on inflation via the Fed over the past couple of years goes out the window. I mean, if that's the case, like, could I see a hike? Sure. Anything's possible. But I don't think that's happening, dude. I think as bad as the tariffs will be, we're not going to end up hiking. We might not cut as much as people are thinking we're going to cut, but I definitely don't think we're going to hike. But the fact that he's saying we're not ruling out another 20% down in the markets, that I don't think is necessarily fear mongering. Now, is he going to be right? Are we really going 20% down? Which would be what? 20% down would be 3,000, right? No, 4,000. Yeah, it would be 4,000 on the S&P. I personally don't think we get there. But I understand why he's saying this. He's saying this because a lot of these Wall Street guys are looking at the writing on the wall. And the writing on the wall is that if all the free trade we've been having for the past decades, and I know it's not literally free, I get it, the tariffs, I understand. But if all of that is disrupted overnight in this new economic paradigm, then asset prices obviously will be affected by that. And more likely than not, that'll create a lot more uncertainty. So asset prices will be hit to the downside versus to the upside. That's the takeaway that I'm getting from Larry Fink's comments. But until we officially get confirmation on April 9th, I don't think we're actually going to fully know how this is playing out. Can we talk about the Goldman leak? Did they use that as exit liquidity? Okay, so that's, look, I don't know if Goldman used it as exit liquidity. What he's talking about right here, for those that were wondering, why did we pump so aggressively this morning off a news headline that there was going to be a 90-day pause in tariffs? It was because Goldman Sachs, we found out, posted some macro research to their clients that there was going to be a 90-day delay. Now, that ended up never happening. It was fake news, but it's pretty crazy because the S&P rallied as soon as that headline came out, and then somehow it went viral. And it just feels a little fishy that there was a spawn of about 3 minutes where you could have dumped everything and gotten the hell out of the markets before it tanked again. I don't know. Maybe Goldman Sachs orchestrated it. Maybe it was just a coincidence. Who knows? The SEC is not going to do anything about this. I mean, like, no one's going to do anything about this. Just like, if the SEC is not going to say anything about a meme coin launched by the president of the United States, they're not going to say shit about Goldman Sachs, dude. Like, this is the wild, wild west now. This is the wild, wild west. And I think we're all trying to figure out how to navigate it. But I think people are really too quick to say that, like, we've bottomed. And like, as soon as that news came out, everyone was like, yep, we bought him. We're going to the moon, yada, yada. And it's like, first of all, it didn't even feel real because of what Trump tweeted 5 minutes before that post came out, which is that, hey, hang tough, hang strong. It's going to be a tough process, but we're going to make it through on the other side. And don't panic. I mean, like what? Then the second later, he takes away the tariffs. Like, that makes no sense. And number two, it's just like, I think there's a level of humility that everyone has to have on what the bottom could be or what the bottom can't be. And everyone's been humbled, including myself. But also, I don't think anyone expected whatever we got on April 2nd in regards to the tariff policies. If it was 10%, 20% across the board, I don't think anyone would have cared. But whatever they introduced is obviously been very humbling for everyone in the equity markets. Do you think Nvidia goes to 50? No, I don't think so. Like, I don't think we get that egregious of a discount. I'm not saying it's not possible, because obviously anything is possible. And if the tariffs really are that bad, then maybe. But like, I still think that it doesn't get that bad. I don't know where the medicine starts to take effect, as Trump would say, but I would be hoping it doesn't actually get that bad. Yeah, we go to zero. There's go. We go to zero. You sound doomed, Amit. Okay, so to answer this again, for everyone that has been saying this, I am not selling a single thing. In fact, I bought more stocks today. So although I sound a bit gloomy about this stuff, because this is the reality of the situation, my actions are not matching my gloominess, which, you know, you're going to feel a little gloomy if everything's down and it sucks. Like, it is what it is. But I think the actual sign of capitulation is selling. And I'm just not doing that. I have a long-term horizon on my stocks. If I didn't sell Palantir, not a single share at 125, I'm not going to be selling it at 74. I'm not going to be selling it if we get back down to my average of 25. Like, it's just like, you know, so some of these things, it's not really a question of being sad or upset or anything like that, because that's not how my actions are reflecting it. I mean, today might end up being a stupid day to buy the dip, but I did, because I felt like grab at 344 became stupid. Grab might go to $3 tomorrow. It is what it, but like, the point is, I'm upset, and I think everyone's upset, because this is not how people expected it to play out. Do I agree there's problems with our trade deficits and our debt? Of course. And I've been advocating for a lot of these solutions that Trump has been calling for the past couple months now, thinking that they're not horrible ideas. It's just, I think the current implementation of tariffs are stupid. That's it. I think it's stupid. And you can disagree, but I think this route is not really the best route. But then again, I'm not the president, so it is up to Trump to figure out how the hell he's going to play this out. Okay, we have a headline right here. Trump administration orders federal agencies to appoint chief AI officers amid push to expand government use of artificial intelligence. Okay, that's bullish AI, right? That's bullish AI. Trump says every federal agency needs a chief AI officer. Cool. We need some more AI in the White House. Palantir right here up about 1% after hours. The S&P 500 as well up about 0.45% currently right now. Bullish Palantir. Yeah, I mean, look, does Palantir have a Doge deal? It hasn't been confirmed. We talked about it on the weekly. I think if any company would have a deal with Doge, like a massive one, it would be Palantir. But this idea of chief AI officers across the entire government, I mean, that kind of does sound like they're reordering a little bit of the government to be a bit more modern when it comes to AI. And hopefully that helps with Palantir as well. Finally, some AI news. Correct. Finally, some AI news. Tanner, what's up? So the Hood Weekly today will be 9 to 10. 9 to 10. And then at 10 o'clock, I'll have the Grab event. So instead of 9:30 to 10:30, 9 to 10 for Hood Weekly. And then 10 o'clock for those who care about Grab, we will have the Grab Product Day event. Again, in terms of my expectations, I have no idea what to expect. I have no clue. Like Grab is they're a relatively new company when it comes to like having product day events. This is the first time they've ever done it, which is very exciting to me because I think that's good. I think that means that they are maturing and they're ready to show off their products to the world. But in terms of, I have no idea. And so we'll find out. We'll find out later today. Can you touch on Bitcoin and crypto? There's nothing more to say other than, I mean, they fell with other risk assets in the beginning of the day. Now I mean, Bitcoin right here is pumping about 2%. So Bitcoin has been relatively resilient, even though on Sunday night it kind of tanked with the NASDAQ. There's no major Bitcoin headlines. I think everyone can kiss goodbye the idea that the United States is going to be buying up Bitcoin in a strategic crypto reserve. I don't think that's happening. I don't know where we're going to get the money for that. We barely have any money to afford this massive tax cut that Trump wants to impose. And obviously with tariffs, maybe we'll raise some money by tariffing the crap out of China to buy Bitcoin. But I don't think the strategic crypto reserve is top of priority anymore in this administration. Obviously, a lot of other things are happening right now. But the fact that Bitcoin's not absolutely getting destroyed and nuked has to be kind of like relevant to the whole crypto argument, which is that it's a hedge against this infinite money printing and the traditional global financial system. Now, I've had the opposite view, and I mean, Bitcoin has tanked with the NASDAQ, so technically that has played out, but I mean, it's holding 78, dude. Like you can't be that upset if you're a Bitcoin bull. You're probably upset if you have a ton of Bitcoin and you didn't sell in the hundreds or whatever, but if you're really that bullish on Bitcoin, I mean, you probably don't care, right? You probably think this thing really will be resilient over the coming decades and go much higher from here. One thing is, right, if the Fed cuts rates because we get into a recession, that does create more liquidity, and Bitcoin might be destroyed by then. But if it's not, that could be something that the crypto markets are pricing in, just like more Fed printing coming in, which would help Bitcoin. But again, that would only happen, in my opinion, if we have a recession, not because the Fed wants to bail us out. Because there's nothing to bail us out from. Trump can put out one tweet and totally reverse the trajectory of everything, like right now. So this idea that we need a bailout from a global pandemic or some massive terrorist attack like 9/11, like that's like it's just not the same as it was or 2008, right? Like we're not in that situation yet, which is why I don't think the Fed is going to come and try to help everybody. Because quite frankly, there's nothing to help right now, given this is a self-inflicted issue. Do you think that AI recommendation came from Doge? I would imagine so. Like if all federal agencies are going to have a chief AI officer, that probably, in my opinion, has been consulted not from Trump himself, but some other agency like a Doge that says, hey, we need to modernize the tech stack across all these agencies, the IRS, FDA, etc. Let's have a chief AI officer, which to me, yeah, it screams Palantir. It screams like some type of operating system across all these agencies. Remember, Karp did smirk when he was asked about, hey, Doge is going to be bad for your business. He gave one of those smirks about you guys have no idea what's going on type of smirks. So I still think Palantir Q1 is going to absolutely demolish. I think we are getting way more than 30% growth. We're going to have great margins. It's going to be a hell of a quarter. I just don't know what the macro is going to look like when we get there. Any guesses who will win the TikTok bid? I don't know, but we have another 75 days of a delay, right? I'm sure Oracle's in there. I'm sure Andreessen Horowitz, one of the big VC firms, is going to be. There's going to be a lot of people putting in their bid. I don't think Amazon or OnlyFans are going to win this, but they probably delayed it to had a lot more time to figure out what's actually going to play out. And so we are going to see some updates on that in a bit. All right, let's get a little bit more market coverage, and then we'll keep going from there.
Welcome back to Overtime. Shares of Levi are higher after the company reported results and said it was coming into this tariff environment from a position of strength. Joining me now is Dana Telsey Advisory Group CEO. And Dana, it's great to have you on. They reaffirmed their full year guidance, but they also said that they're not including possible tariff impact into that guidance. Your thoughts on what this says about Levi, what we can expect from other reporters in coming weeks, and the importance of a diversified supply chain?
I think a couple things. And first of all, Morgan, thank you very much for having me. They beat the quarter. They maintained the guidance. You look at the sales growth in the quarter, up 9%. The sales growth for the year is guided to 3.5% to 4.5%. So they left themselves room. No one knows what the magnitude of these tariffs could be. All we know that is it's not good, given the pressure it puts on the consumer, given the pressure it puts on these businesses. So maintaining the guidance with a beat gives them some wiggle room. The diversification of sourcing that they talked about is certainly critical, but prices are going up. It'll be shared by the consumers and the manufacturers, and retailers and consumer companies are going to diversify. I've been speaking to a ton of companies over this weekend, and the amount of change that needs to happen is very complex, and companies are being very cautious about orders going forward because bringing goods in early allows you to get a better price. The fact that they got better sales, that their DTC business was strong, that the margins were solid, this could look like some of the better ones during this earnings season coming up. And keep in mind, they didn't give guidance to the second quarter. Let's hear what it is, because being able to beat, and they're basing in for basically more conservatism going forward through the year. And I think that's what you're going to see from consumer companies.
Look, that's going to be a big thing, dude. The Starbuckses of the world, the American Airlines, the Deltas of the world, all of these companies are going to have to figure out how do they communicate to investors the overarching landscape of where the consumer is right now. I mean, let me ask you guys questions in the chat. You guys already know me. I'm not getting my Saratoga water anymore. But are you feeling a bit of a wealth effect to an extent, right? An idea that after this drawdown, you're like, and obviously I'm playing around with the water as like an example here, but like, I'm assuming a lot more people are feeling, hey, maybe I don't want to spend as much as I was going to spend before. And then that could quickly reverse, obviously, but how real is that consumer confidence? Because all the consumer confidence surveys we've seen have been bad, right? Michigan, et cetera. But does it actually map to reality? Well, earnings are going to let us know, and particularly Q2 earnings, not Q1 earnings. But if people still have the money to go on a vacation or to travel or to eat out at a nice restaurant, and they're not necessarily feeling the pain that the stock market's causing them right here, maybe Q2 earnings are not that bad. And maybe companies will somehow be able to guide positively around it. But obviously, if it hurts a lot more people than expected, then we're going to see more pain. June says, definitely. I'm beneficial says, yes. Eric says, I'm broke. Andy says, it's the poverty effect. Oh my gosh. Yeah, I mean, look, I think everyone to an extent is feeling some of that pain. Some of that pain. And like, yeah, it's 100% wake up call to stability. I agree. So the question is going to be like how actual bad is it? Like Lululemon, again, I bought that $150 hoodie, A, because I really needed a hoodie that day, B, because I told myself I would return it. That's how I justified it, but I never returned it. But like, you know, how many people are waking up saying $150 for a hoodie? Fuck this. Like, I'm not doing that, you know? And I don't know where Lululemon gets their hoodies from. I don't think it's from the United States, which is probably why they have an insane margin on it, charging $150. But let's say it's let's say that 150 turns into 175 for whatever reason. I mean, You know, like that's what I think we're gonna. And Lululemon already tanked like 30% after their earnings because of what they showed in terms of lack of growth, but also their China exposure. So I think that's what Q2 is going to really, really be important to see. How unbelievably bad is this going to be for the broader consumer? Eddie says, I always act like I'm broke. Nothing has changed. That's fair. Dude, to be honest, like, I know I'm joking, but I act like I'm broke too. I don't spend money. Like, the only money I spend is on business. Like, if I have to get a flight to go to AIPCon, I'll, like, you know, I have to get my hotel. Like, that's what I don't spend money on. Like, I don't buy shit, bro. Like I don't buy shit. Like, I don't spend money. So to me, I've never been a big spender. I've never had some fancy lifestyle where I need to spend tons and tons of money. I've never been materialistic. So it's not really like an issue. Like, oh, I have to really take down my spending. Obviously, I'm just joking about the Saratoga water and stuff. But I think everyone to some extent is going to feel that maybe they take back a little bit of their spending if the markets tank. Dude, I needed a hoodie, which is why I spent that $150. And Lululemon was the only store available, and I had rehearsal, so I had to just go quickly buy something. I did get 3% cash back, though. Maybe that I tried to justify it with my 3% cash back on Robin. I was like, oh, you know, I get 3%. Was I made $5 on that? So, you know, I found every way I could to justify it, to buy it. Although the hoodie was incredible, dude. It's a comfortable ass hoodie. It's one of the best hoodies I've ever had, ever. Like, this is not the hoodie. This hoodie, my boy Adam, shout out to Adam Bergman. He gave me this hoodie when I got the Tesla. But it was a really good hoodie. But the point is, like, you know, when things are bad, no one's paying up that much money for just a hoodie. Derek says, wake up every day and act like you've only got $100 in your account. That's what Vlad taught me every single day. I agree. For those that don't know who Derek's talking about, he's not talking about Vlad from Robinhood. He has a business partner named Vlad. And he's gained a lot of lessons from that business partner. And he's given me a lot of those lessons as well. But, like, you know, there's a reason I don't have a Rolex or anything, you know, like that's another thing Derek taught me a long time ago. It's like, no matter how much your personal wealth accumulates or gets higher, you don't spend it on stupid shit like a Rolex, in my opinion. Again, if you really love watches or whatever, it's different, but you know what I mean? Like, a Rolex is a metaphor for a Lambo and all the dumb shit people buy when they make money. Because then when something like this happens, I mean, you got to get ready to sell those assets because you've diversified into stuff that really isn't that valuable. So yeah, I mean, look, if you're not a big spender and you're not over leveraged on margin, I think this is something really easy to just wait out and weather the storm. But obviously there will be some level of wealth effect for everybody. Bloomberg headline, Apple customers dash to stores to buy iPhones ahead of tariffs. Employees describe the atmosphere similar to holiday season. Wow. Interesting. Really? That's a Bloomberg headliner on Apple iPhones here. Apple customers dash to stores to buy iPhones ahead of tariffs. That could actually be a tailwind for Q2 for Apple. It's not the most positive headline, but there you go. Apple customers dash to stores to buy iPhones ahead of tariffs. I wonder if Apple actually raises their prices anytime soon to be able to combat some of this. But okay, so yeah, I mean, so already, you know, we're talking about the wealth effect, but now you got consumers going the opposite direction, saying, "Hey," I mean, we might see this with cars, right? Like, if we do have those tariffs, the average car price. I was reading an article the other day. I don't know if it's going to be accurate, but it's like $7,000 to $15,000 you can increase on average. A car in the United States would go up in terms of its price. I mean, you might have a little bit of people chasing to buy goods, almost like how companies did in Q4 to import their goods to avoid the tariffs. Consumers might do the same, which, guess what? Sucks for inflation. Like, that's not good. That's not good at all. So is the Fed going to cut when they see everyone going to buy laptops and iPhones? No, because they know inflation's about to pick back up, probably above 3% easily if that happens en masse. So you just, like, the Fed's just not going to bail us out here. And then when we have more inflation, I mean, maybe that's where Larry Fink gets the, Jay Powell could increase rates. I don't think he will, but you can make a logical argument for how you see that playing out. But yeah, that's why no rate cut anytime soon, and definitely not the 4 to 5 cuts that people are thinking is easily going to happen. Oil prices dropping is anti-inflationary. I agree. Gas prices have come down dramatically. Like, yes, like there are things that are happening that are good when it comes to inflation coming down. Shelter's coming down, oil's coming down, all that good stuff. It's just going to have to be combated with the tariffs that could be inflationary and the fact that people might rush to buy goods before the tariffs go into effect. And as a result, increase the price of their products or increase the general inflation that exists in the overall economy if people end up hoarding goods before tariffs go into effect. Which, I mean, look, I'm only thinking of that because of that Bloomberg headline. I didn't even think of that the whole weekend. And but it's like that could be possible. So it's going to be a balancing act of all the things that are coming down that Trump likes is coming down, energy, oil, etc., versus the things that could go up. Gas in my area went from $3.20 to $2.69 to $3 almost within the same week or more. Yeah, I'm at like $2.70 right now in New Jersey. I don't need gas anymore, but I think last time I saw it was like $2.79 from $2.70. So modest increase, but not some dramatic increase that we're seeing right now. Yeah, $3. I mean, for all the people in the West Coast, obviously $3 is, $5 in LA, dude. That's insane. Now I get why there's so many Teslas and EVs in California, dude. People are just tired of paying $5 at the pump, bro. The only time I did that was 2022 when inflation was at like 11%. And the gas stations in New Jersey, they wouldn't put a 5 handle. They made it $4.99. Even if they were losing money on that 1 cent, they did not want the psychological impact of seeing a 5 handle. So I think we peaked at $4.99 in New Jersey. But then it came down, and it's down right now under $3. But obviously it could come higher if we see a resurgence in massive levels of inflation, even if oil is taking a little bit of a dip. Nvidia right here up about 0.72% after hours. Tesla up a little bit. Bitcoin still holding on 78.7, and then the S&P 500 up 0.47% here right now. Okay, on the poll, I said, do you think the Fed can bail us out? 70% of you said no, which I would agree. It's going to be hard to think that 70% of people, or it's going to be hard to think that the Fed is going to be able to save us. And I think a lot of people kind of are in the same boat. Oh, someone just called me. Let me call him back and get his thoughts on the market.
Going on, Amit?
Steve, buddy, we haven't talked in so long.
I know. I'm currently driving through New York City, and there's a huge protest I'm driving through at the moment. And this is pretty crazy.
Are they protesting the tariffs?
They're protesting something at the UN.
Interesting. Okay.
Yes. Very interesting.
Well,
always a protest in New York. Always a protest.
There's always a protest in New York. I'm happy you called because I was just talking about, a little topic called tariffs. I was, pontificating.
A little topic called tariffs.
I was putting my thoughts out there. We had a long conversation last night on the market or on the future show. S&P basically flat on the day. What are you thinking now?
I'm thinking that we probably bottomed last night.
Okay, I think you're being a little too optimistic.
Maybe.
Okay, so why? Why do you? Is it just because stocks went up today, or like what is the reason?
No, but I mean, we went over everything last night, so I guess this is new for anybody who didn't tune into that show. But I really don't think that they are looking to permanently inflict damage on the economy or the market. And they have to know that going into the midterms, which are still a year and a half away, there's no way that they're going to want to hand this to the other side. Trump will get impeached. I don't think that that's what it is. I think this is act strong, get people to the table, make deals, claim a victory, bring in a little bit additional revenue. And I don't think that they really thought that it was going to tank the markets the way that it did.
So here's my question. We all felt we bottomed on Thursday, and we all felt we bottomed on Friday again. My question here is that all of those times we felt we bottomed was because everything officially got priced in. April 9th, which is 24 hours from now, will be the day that everything is implemented. When it actually does go into effect, the way that Trump's been saying it's going to go into effect, why would the markets not get upset at that?
If it goes into effect.
Well, based on the multiple comments he gave today, he's not backing down.
You know as well as I do, what he says today could be very different from what he says tomorrow. He could have 20 phone calls tonight. Who knows?
That I agree with
One
you.
thing
I
that
agree.
nobody can take away is he is unpredictable.
Well, look, I agree. So Bassett, you probably didn't hear this, but he was just on Fox News, and he said 70 countries approached us on trade. So the market was actually up after hours because of that idea that, hey, maybe they launched 70 deals tomorrow. But let's say they launched 70 deals tomorrow, but China and the EU still get a 70% tariff on Wednesday. I don't know how the market's going to react to that. And I don't know if that would easily be able to say today's a bottom.
Look, the market can continuously go down. I think it's going to be hard to go down much further than it is unless something really drastic happens. And I think there's common ground to be met. He looks at himself as a deal maker, and I think he's looking to make deals. People need our economy a lot. So there's always going to be a deal to be made. If it's a deal he takes, it's a different story. But we'll see.
No, I agree. I can't argue with you there. Did you do any buying today?
I did a little bit.
Okay, let me guess. Wait, can you say how many stocks did you buy? Like multiple stocks or one?
4.
Name? 4 names. Okay, guess in the chat. What are the 4 names you think Steve bought? We're gonna go one by one.
You're only going to get one of them.
Okay, so the first one I think is pretty obvious. You bought some Nvidia today.
First one's obvious. The other 3 are you're never going to get. One of them is an ETF. You're never going to get them.
Okay, so first one's Nvidia, right?
First one's Nvidia.
Okay, Derek says your second one is Google.
No.
Amazon.
No. I'll give you a hint. Nothing else tech.
Okay, so the next 3 are not tech. I'm gonna go for the 2 individuals, not the ETF here. PayPal.
No.
SoFi.
No.
Did I just throw shade at SoFi because you said no tech? And I said I didn't mean to. But no tech, huh? Oh, SLG.
No.
Verizon.
No.
Okay, give me another hint. Outside of tech, what sector is it in?
Energy.
ET.
Close, but no.
Kinder Morgan.
Yes.
Interesting. Okay, pipelines. Okay, what VG as well?
No.
Okay, so we have Kinder Morgan, we have Nvidia, we have one more. I'm gonna go with Altria Group.
No.
Is the other one in energy as well?
Yes.
Enbridge.
No.
You said no VG. Oxy?
No, but you're getting close.
Chevron.
Getting close, but no.
Exxon Mobil, baby.
Getting close, but no.
Okay, I don't know that many other gas brands. What else is there?
You're very close. Like you're hot. You're not even warm. You're hot.
Shell.
No, but you're like so. You're touching the fire.
BP.
Yes.
Oh, there you go. BP. Okay.
BP at 6.6% yields. Close to 7. I mean,
interesting.
I like it. I like it there. And then I bought some of SCHD because of how low it is and the companies it holds. I just think it's a great value here. Plus, it was yielding like 4.15.
Okay, so your buys were Nvidia, Kinder Morgan, SCHD, and then what's the last one? BP.
Look, we're going to need more natural gas. I like the way Kinder Morgan's set up, 78,000 miles of pipeline. They are spending another $8 billion in CapEx over the next several years. They got 2 huge projects coming online over the next 2 years. I think that this is just a play where they're going to continue to increase cash from operations. Balance sheet's getting better. Strong dividend, not huge, but strong dividend, 4.5% or so. I like it, and I think it's undervalued.
I don't hate these. You're buying some yields in a market where you're getting better than money market funds, and you're buying companies that theoretically have been slashed almost in half, right?
BP does $12 billion in free cash flow, and their market cap is like $70 billion. I mean, you're paying like 6 times free cash flow for BP. It's crazy. It's crazy. I think it's very undervalued compared to the other super majors here.
So it was a dividend-oriented day for you. Less growth, more dividends.
You could say it was 100% because NVIDIA pays a dividend.
NVIDIA does pay. I just picked up my $8 dividend on April 2nd.
I mean, it's better than nothing.
I'm gonna have to pay, 30% on that. So
you go get a Big Mac.
Dude, who eats Big Macs?
I don't know. Somebody.
There's no way you don't eat Big Macs anymore.
No.
Okay, like no one.
I said you could go get a Big Mac, not me.
No one who loves their body eats a Big Mac. Can we agree on that? Like, it's like, come on, bro. Big Mac. Like, first of all, there's so many better burgers out there than a Big Mac. Second of all, it's a Big Mac. It's disgusting. But anyway, okay, the 10-year still about 4.2%.
Yep.
The plan is not working. What is your reaction to what's going on with the 10-year right now?
We gotta wait and see. I mean, look, I think the Fed's gonna cut. I really do. The more I think
wait, hold on, Steve. Why would the Fed cut?
Let's put it this way. I was one of the only people who was saying last time around, they're not cutting. And I was off. I thought they would cut in June or July. They ended up waiting until the September meeting to cut. But I was never in the March camp. I was never in the January or February camp last year.
Steve,
I am going to say I think they're cutting in May.
Why? Like, please tell me, like I'm a third grader. Why would the Fed cut in May?
Okay. The Fed cuts in May so Mick can go away.
That was so dumb, but it was kind of funny. But it was so bad. People are gonna laugh at that because they love you, so they're gonna think that's a funny joke. But it wasn't funny. But it kind of was.
I thought it was funny.
No, seriously, Steve. Tariffs are inflationary. Why would they put fuel in the fire on inflation by cutting?
A robust job market is more important than inflation. It is so much more important than inflation at this point. Inflation.
The job market is great. What's the issue?
It is no. Unemployment's going up. Okay, regardless of how much it's going up by, unemployment's going up at the moment. Okay, now you have a lot of debt that needs to be refinanced in both corporations and in real estate. All these companies borrowed at very cheap levels. And when you get into a situation where, and we looked at the 10-year effective rate last night, you had a lot of periods where the effective rate was under 1%. You had the majority of the past 10 years where it was under 2.5%. So even at 2.5%, people were borrowing then. With the Fed funds rate at 4.5%, it's almost double. So if they have to refinance at these levels, it's going to compress margins. It'll likely cause them to cut positions in order to maintain profitability. The same thing with the debt market on real estate.
Steve, but hold on. Unemployment is at 4.2%. This idea that it's massively exploding is incorrect. It's just not true.
I didn't say massively, but it's up 4 or 5 tenths right now.
Yeah, but it's up from a historically low 3.5.
Like, it doesn't matter. Every time going back to the 50s, every time we've had a recession, you go back and you take a snapshot and you look at every recessionary period, it is because unemployment moves up a percentage point, an exact percentage point into the recession. If we get companies having to refinance at higher levels that could cause unemployment to go up, and that could trigger a recession. The Fed has an obligation for maximum employment. And at this point, maximum employment is more important than interest rates.
But Steve, I get it, but we added 228,000 jobs.
That's not a lot of jobs. That's not a lot of jobs.
Okay,
Unemployment's still going up.
No, you're making a subjective opinion to make the argument make sense. There is no way in hell Jerome Powell sees 200,000 jobs and says, "Oh, we need to cut rates." That's just not happening. Like, can we be realistic? He's not gonna cut on that.
I'm being very realistic. If we have to refinance debt at these levels on a corporate level, you are going to see unemployment go up past where it is here.
Wait, why
And
would
that
unemployment?
could
Hold on.
trigger a recession.
Why would unemployment go up? Because we have to refinance debt.
Because it compresses profit margins. The interest on servicing the debt becomes more expensive. It takes money out of corporations' pockets.
Okay, but
Earnings from operations goes down.
Cool,
They
so-
will have to have rips.
Okay, so that means we should be seeing mass layoffs. We're not seeing any of that, and we're not going to see it by May 19th.
Because it hasn't happened yet.
Well, so you're saying he's going to do a preventative cut before the layoffs happen?
He should do a preventative cut before these companies and these real estate businesses have to refi their debt that are at historical lows. Because right now, where the borrowing market is not good for profit models.
I don't even disagree with you there. I think you're spot on this. I just think the probability that JPL comes out with a preventative cut is like next to none, in my opinion.
Look, I am just saying what I think he should do, and I'm hoping that they do this because having inflation at 2.8 or 3.2 doesn't matter. It just doesn't. And it was at 9. It's come down more than enough. Oil is also down, and it doesn't look like it's going back to 70 right now. So it's around 65, 66 or so. Oil is going to be a major driver. Input prices are lower. Shelter's coming down. I really think inflation is not going to be a problem. And trying to thread the needle for years and having a happy medium between the two is not realistic. The pendulum's going to swing, and it's better for the economy if it swings toward unemployment than toward trying to get the price stability to 2% instead of 2.8%. Like, really, does that really matter if you pay 102 or 102.80 next year on every $100? No, it doesn't. But it matters if Americans have jobs.
No, I agree. Again, just this Fed has been hell-bent on their 2% target. So I agree with you. 2 or 3% really doesn't make a difference. But
doesn't matter. And they're going to be forced now because, as you said, tariffs will be inflationary unless there is a large tax cut to offset it and put more capital in people's pockets. But without a large tax cut, tariffs will be inflationary, and that will also compress corporate margins and could lead to layoffs also.
So what
the
happens
Fed
if we
needs to
don't
cut.
get the tax savings, but we get the tariffs? Like, that's the worst case scenario, right?
The Fed needs to cut.
But in general, if they don't make a policy where they increase the standard deduction and we have cost of goods go up, that's just immediately going to slow down growth at that point, right? I mean, if
the Fed would need to cut to lower borrowing rates, and you would get some reprieve on some things there. It may not be enough, but it'll be the only tool we have.
Yeah, no, I agree. You would either need a massive Fed cut, or you would need the Trump administration to legitimately make 150K or less.
You don't even need a massive Fed cut. Remember, the Fed took rates to the highest level we've seen in a long time and went up very quickly in a straight line. You had 3 consecutive meetings where they went up by 75 bips each. You can do a cut at 50 bips, and that's not an emergency cut. That's not even equaling 3 of the cuts that they did 3 of the increases that they did previously. So a drastic cut would be cutting by 100 bips. I'm saying they need to cut by 50.
Yeah, I don't know. I think 50 with the threat of inflation from tariffs is too aggressive. unless they say we think tariffs will create a recession, therefore we're cutting before, which would be a very mature thing for Jay Powell to do because he messed up in 2021 with this. But
they've been accused of being behind the eight ball so many times. It is better for them to act preemptively, cut by 50 bips, don't do anything in June, see how things go. Because what's the difference if they cut by 25 bips in May and then 25 bips in June? It comes out to be the same thing. You just get an extra 30 days with 25 bips. Like, just do 50, see how it goes.
Yeah. I mean, you're not wrong on that. You're not wrong at all.
You know what's interesting? Did you read the comments on my Tesla article?
I didn't. Let me actually put that in the chat. So this, when's the last time you wrote about Tesla? This is the first time in a while, right?
A while ago, November.
Okay. The title of this article is, hold on, what's the title of this? Tesla, more short-term pain before long-term gains from the next industrial revolution. It's pretty neutral.
I gotta tell you. First, I didn't know what I was talking about because I was a bear. Okay? And everybody was angry. People offered to donate to my favorite charity to debate me. I mean, it was crazy. Like I've showed you those screenshots. It was crazy. Then, when I was bullish, everybody was happy. Now that I'm neutral, I have no idea what I'm talking about. People are saying robotics and autonomous is bullshit. Like the comments are hilarious on this thing.
I didn't read the comments. Should we read them together?
Oh my God. You just scroll through the comments. You're like, what are these people
Hold on. Can we read
Like, they can't make up their mind.
Okay. Okay, this guy wrote an essay. I'm not reading that.
They were telling me that Boston Dynamics can manufacture just as good as Tesla. Like, are you kidding me?
This guy says, an analysis only based on hopes and dreams instead of facts is not an analysis.
Right.
Oh my gosh. Concerning Optimus, there are hundreds of other companies working on humanoid robots already for years, and they, of course, use AI. So why should Tesla, without much experience in this field, become a leader here?
Like, do these people not understand that Tesla went up against all odds and beat Ford and GM at their own game? No, the automotive industry was like the one industry you did not want to go into. You could raise capital and create a SaaS company and compete with software, but the amount of capital needed to build factories and actually become an auto manufacturer, nobody was doing that. And Tesla, not even going ICE, they went electric. There was no market for that. He pioneered it. And to say that these other little companies can manufacture just as good as Tesla, have you seen what they did with cars? What do you think they're going to do with humanoid robots?
This guy says, I might become a bull when it hits $10 a share.
Yeah, I mean, I'm not even that bearish.
This guy says, how will FSD's robotaxis and humanoids help put food on the table? Asking for my dog. Dude, some people are just bored. Like, some people are just genuinely bored.
And it's funny because not a single person made a comment about the actual analysis about why I think that they're going to miss their Q1 revenue consensus estimates by 2 to 9%.
Oh, you mean they saw the headline and just left some dumb comment and didn't even read anything?
I mean, when I looked at it at like 9:30, I had like 32 comments. Like, there's no way to just make people fucking read this quickly.
No way, dude. Your articles take a long time to get there. And you show both sides. So most people wouldn't be that biased in the comments if they actually read the multiple angles that you
Yeah, I mean, look, I fully think that there's a lot of brand reputation damage that happened. And I fully think that shares are going lower. And when I look at the deliveries and I look at what the revenue decline per delivery has been over the past year, we've gone from 44,000 to 39,000. And when you look at where the revenue per delivery is today versus the amount of vehicles that were delivered, I mean, you're starting behind the eight ball by a couple of billion. And even if you give energy and services an extra billion in growth this quarter, they grew 700 and something million last quarter. Let's say they grow by $1 billion this quarter. They're still going to miss earnings on the high side by I think something like 550 million, or I should say revenue by 550 million. And on the low side, where the revenue doesn't increase per vehicle, I think they're going to miss by over 2 billion. I mean, it's not going to be good. And that's giving a lot of respect to the energy business right now.
Derek said he's buying Tesla puts this week.
I mean, all I think is when I run the numbers, I'm not seeing how they can meet or exceed revenue estimates.
So what's your price?
Not,
What, 170? Where are we going? What do you think? I mean, it's a nice bounce today to 233 from 215.
Yeah, I mean, look, I wouldn't be surprised if we see between 150 and 100, and I wouldn't start buying again until 125, only because my price, yeah, but my average is like 130 something.
Yeah, but still 125, Steve. That's another 50% down from here, basically.
Yeah, they do $14 billion in net income, and they're a $750 billion company. It's crazy.
Derek said he's going to start buying when the shares of Tesla get back down to the price of my physical share. You know I have one of these, right?
Yeah, you have one, and I have one pound too.
Yeah, Derek got me this one because he lost a bet. I think the average was 180 on this, Derek, roundabout. So there you go. You guys can see the nice little message he sent me right there. But
the only thing that can destroy my thesis about it going down is two things. They beat earnings, which I think is very improbable, or they come out and say autonomous is launching this summer, robots are 100% coming Q4, and we have a ton of back orders already. And they play that side up. But I don't.
How do we take the other angle where they spike up to 270? Like, what's the world in which that happens on earnings?
I mean, I'm driving, so I can't go through the exact numbers, but you can read the numbers. They're in the chart.
No, it wouldn't have to do with numbers. I mean, I'm saying, what does Elon say? Like, let's say they say, "Oh, we have a."
He's got to say that the ride-hailing network is done. They're unveiling it. He already has deals worked out with insurance companies, and they think they're going to generate X amount of revenue within the next 5 years from it. And Optimus, it has to be all sunshine and roses, not even rainbows, roses, for autonomous and Optimus to get there.
What if Elon says, so we've had a very large company in the United States reach out to us, and they want to buy 10,000 Optimus robots. What if he says that? And they've already given us a deposit for half of the robots. What if he says that?
Yeah, he's got to come out and say stuff like that.
I think that's what we need, because the number is going to be so ugly. We need something to distract us and think about the future, the potential, the hope. And it's either the robotaxi stuff or it's the robots.
Look, automobiles are still more than 75% of revenue and gross profit. The deliveries are down and the revenue per delivery is down. There is such a slim chance of them meeting expectations from what the consensus is.
Yeah.
That I just don't think it's possible. Like, if I had a bet, are they going to miss, exceed, or excel? I would put every last penny I was willing to bet on missing, because unless guidance gets.
No, guidance is going to be shit. How is guidance is going to be disgusting?
I'm sorry, unless consensus gets changed. But if you leave consensus where it currently is, there's no way that based on the amount of deliveries that they did, they can meet those revenue numbers. If they can't meet the revenue numbers, they're not going to meet the EPS numbers, because they continuously dilute shareholders and have a lot of shares outstanding.
Okay, here's a question. Tesla has, and correct me if I'm wrong, guys, but I believe 30 billion in cash. You know this, Steve?
Yeah, it's a big cash pile.
Okay, so what if they announce a $10 billion buyback?
That would be smart, but it won't do any good unless they say that they're going to stop diluting shareholders and they're going to start buying everything back. That could help. But it can't be counterintuitive.
The problem is Elon doesn't buy his stock back. He invests his money. So I really, ideologically, Elon has publicly said he doesn't love buybacks, but that could be one thing to maybe stop the pain if the earnings are that
I don't
bad.
think they're in a position to do it. They're going to need that liquidity to build everything out
Yeah.
that they need to do. I don't think they're in a position to do it.
I agree. I agree. I mean, maybe they could do a couple billion, but
Yeah, but
10 or
it's
20
not.
billion.
That's not even worth it at that point.
Yeah. No, you're right. You're right. You're right about that. Like Nvidia can afford to do their $50 billion buyback.
All those companies can afford it. Tesla has a lot of things they're trying to do. They need the liquidity, especially if deliveries continue down. I mean, look, if Q2 is not good, and think about this, deliveries in Q2 decline from where Q1 is, you're going to have a lot of people saying this trend has been established and it is now shown that Elon has caused irreversible harm to the brand.
Hold on. Can we talk about this? I was reading an article the other day from Forbes. Is the Cybertruck really one of the biggest flops ever?
I think so.
Because the article went into the numbers.
I have no data to back that up, and I see them around. I think they're hideous.
So I actually really like the design. I've driven one before. I think it's a cool car. But I saw the numbers in the Forbes article, and I was like, this thing really didn't sell like people. It's not the new F-150, not at all.
No.
And it's so expensive that, you know, not that many people can afford 80 to 90 grand for a car. The only other that they sold 12,160 other vehicles outside the Model 3, Model Y. 12, I mean, which includes the Cybertruck, Model S, etc., Model X, all that stuff. So, I mean, this thing is not really selling.
They should have put all their efforts in a $25,000 model.
Yeah, I mean, just like objectively here, I'm not even being emotional about it. Like, what was the point of the Cybertruck if it was going to sell? Like,
It's a vanity project. He thought it looked cool.
It really does look cool. But
I think it all started out as a joke, and then it just ended up being something that he couldn't take back, and he had to see it through.
yeah, I mean, look, I'll put the article right here in the chat, but these numbers are pretty disgusting on the Cybertruck. Like, the Model Y refresh is doing very well from what I'm seeing, but yeah, like, what was the point of investing all that time and infrastructure to make a truck that no one cares about? Or that they can't manufacture fast enough?
Especially if the people that were buying previously are not buying now. That is the big worry with the automobile business.
How many of you guys think the truck is ugly? Put in the chat if you think it's ugly.
And look, I ran the numbers on ride hailing. You know, when I wrote the article on Saturday, I did a Uber search from Long Island University to Walt Whitman Mall. It was 14 miles, and with a 30% discount, it was like $30.50 or something like that. 14 miles. So when you do the math, why am I hearing that?
Go ahead.
So when you do the math, if somebody needs to travel to work 20 miles each way, or you say 14, make it 14 miles each way, and people were making the argument that people are going to get rid of cars and just use the Tesla ride-hailing service. So now you need 40 trips a month. 40 trips a month at $30 a trip is $1,200. A lot of people travel more than 14 miles to work each way. $1,200 is not feasible. Even when you figure in a regular lease, when you figure in insurance of $200 a month, and then budget in $150 for gas. Now, the idea that autonomous is going to drive the price down. Okay, even if it drives the price down by 50%, that's still $600 a month. And that doesn't even include you need to go to the grocery store or anything else you need a car for. So I have never been in that camp. Everybody has tried debating me on it. I got to tell you, the numbers for ride hailing for people giving up personal vehicles does not work.
Well, look, here's my thing about ride hailing. I took the Waymo in San Francisco. It was way more expensive than an Uber, and the experience was cool, but it's not like it was that much more special, in my opinion. Maybe it's because
I'm not going to say that it is not going to take away from Uber's mode or Lyft's mode or anything like that. It'll generate revenue. But the idea that people are getting rid of their vehicles for this is crazy.
No, I'm agreeing with you
their
here.
vehicles for Uber.
I'm agreeing with you. If they launch in Austin and the prices are not significantly lower, the only people that are going to be getting into a cyber cab are going to be people who want to post on Twitter about it. Like the average person who needs to get from A to B is not going to take it.
they need to be at 20 to 25% of the current cost to make it cost efficient enough to get rid of the vehicle, which I don't see that happening.
I don't know if that's not going to happen. I'm just not educated enough about their unit economics. But if they make it happen, I think it's a game changer, because if I can pay $9 instead of $12, I'm taking the $9. Right?
Yeah,
But
if they can. But that's also based on a Saturday when there's no traffic, and that's why I did it on Saturday, because it's cheaper because there's no traffic. So 14 miles and no traffic costs just over $30. I mean, that's expensive when you think about 40 rides like that. And I gotta think that doing that during rush hour in the morning and rush hour at night, when everybody needs to go, I mean, that bill could be more like $1,600, $1,700 a month. So they're going to have to do this for pennies on the dollar to get that mass adoption.
Yeah.
Which seems not likely to me. And that's why I can't get behind ARC's numbers. I've always said that.
Well, ARC's numbers have always been stupid, dude. I mean, they're assuming like Tesla takes over the entire ride hailing, or they get a big chunk of it, and it's like, but they haven't even launched yet, bro. Like the only reason Waymo's getting all these rides is because they're in San Francisco, and like people have the disposable income to spend a little. Like, Austin's not the richest place in America, and when they launch from city to city, we have to see if this works, and we need time for it to work. And I'm confident it will work in the long term, but you know, the idea that they're going to go to 500 because RoboTaxi immediately worked, like it's going to take more time.
Not anytime soon. It's not going to be accredited anytime soon to make a difference.
Yeah, but look, in the face of all of this, this stock is still holding up, bro. I know it's down a lot from the highs, but I mean,
I don't know how.
Right, you would think it would be like 150 by now or something, right?
At least minimal.
It's holding.
Yeah, it is. It's doing a lot better job of holding than I thought it would.
On the poll, I asked how many people think the car is ugly. Wow, 66% of you said it's ugly. I actually don't think it's ugly. I actually really like the design. I think it's cool. But I was surprised when I saw those numbers of how bad.
Yeah, I'm just not a fan of it.
Okay, I just want you to listen to 2 clips and we'll get your reaction, then we'll be out of here for the day. This is Basent just now on Fox Business.
Larry, I can tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. And Japan is a very important military ally. They're a very important economic ally. And the U.S. has a lot of history with them. So I would expect that Japan's going to get priority just because they came forward very quickly. But it's going to be very busy. And if President Trump, again, gave himself maximum negotiating leverage, and just when he achieved the maximum leverage, he's willing to start talking.
There's one more clip.
Yep.
Maybe almost 70 countries now who have
actually this one, yeah, here it is.
Better than anyone at giving himself maximum leverage. So what he's done is we outlined the tariffs on April 2nd, and then gave the countries several days to think about it. As I advised on many shows on April 2nd, I suggested that the foreign officials keep your cool, they do not escalate, and come to us with your offers on how you're going to drop tariffs, how you're going to drop non-tariff barriers, how you're going to stop your currency manipulation, how you're going to stop the subsidized financing. And at a point, President Trump will be ready to negotiate. And he had a very, very productive call with Prime Minister, with the Japanese Prime Minister this morning. And he has asked me and Jameson Greer to take the lead on this. And as you said in your last segment, President Trump is going to be directly involved in those negotiations.
Your reaction, Steve?
Yeah, we have the most leverage out of any country because we are the largest economy. So I think, like I said before, and I'm not changing my stance, I think he's talking big to get people to the table. He's going to make a whole bunch of deals, and he's going to reshape things gradually, not drastically, and he's going to claim a win, even if it's more an accommodation. And that's how we get out of this.
All right. So we got about a day left to get deals. Maybe we get
we'll
it.
see. I mean,
Maybe April 9th, he delays it to April 19th and gives them 10 more days. I mean, that could also.
Nobody knows. He's unpredictable.
Yeah.
But at the same time, just like we said last night, the one thing he does not want to do is lose. He cannot afford to lose both branches because he will get impeached on day one. Will get impeached. So you can't roll into next year with this still going on. And you can't have this go on for 3 to 6 months and cause a recession, because that's something that will continuously be brought up. If you have 2 or 3 weeks of pain and then everything goes back and we have better deals, we're bringing in a little bit more money and everybody's happy, he looks like a good negotiator. And this was a nothing burger. And he needs it to be a nothing burger. Otherwise, they're going to lose at least one branch, and if they lose 2, he gets impeached.
But here's another thing. They need really good deals to be made, because if they don't, and we went through all this hoopla for like a 1% reduction from Taiwan's tariffs or something, like, I mean, a lot of people are going to be like, why did we go through all this? Right?
Really good deals is subjective. He needs to claim a win. We'll see what that is.
All right. Steve, thank you. Steve's Twitter right there in the chat. You can check out his new Seeking Alpha article. I will talk to you soon.
Yeah, if anybody leaves a comment on it, I will be responding to every comment later tonight or tomorrow. So leave a comment and let me know if you think that Tesla's going to make earnings or not.
All right. Thank you, Steve. Appreciate you.
All right. Later.
Later. All right, folks. There we go. I think that's it. I think that's it for today. It's been a fun day, to say the least. Market open was insane. Dude, that green whipsaw to the upside was wild, bro. That was legit. Just seeing that happen, plus 2%, 520 on the S&P. Look at that, 523.17. Look at that, 481. That's where we opened at 945 by freaking 10:19. 40 minutes later, 523. And then she came all the way back down. We ended out the day at around 504. But yeah, it was a fun little day trying to navigate the equity markets. All right, cool. There we go. That's it. I will still be live. Derek, thank you for joining, and thank you for being part of the show as well. Have a good night, everyone. I will be live for Robinhood Weekly at 9 p.m., 9 to 10. And then the Grab event from 10 to 11. So for anyone who cares about Grab, they are having their big Grab product day in Singapore. So I'll be streaming that live. And we'll see if there's any big announcements that they are trying to put out as well. Matt says, when I saw it jump to 523, I started looking for another property. Dude, I was about to order some more Saratoga water on Uber Eats. I was about to Uber Eats some Saratoga water when I saw 523 on the S&P. And then we came back down to 490, and I was like, no, we're going back to Dasani. That's it. So, all right, thank everybody. Appreciate it. We'll be back later in the day. And we live another day to survive and see what is going to happen in this market. Tomorrow, obviously, will be a big day. Last day before they get any deals done, if they get any deals done. And so we'll be covering it throughout the entire day. All right. Thank you, everybody. Appreciate it. See you guys on the next one. Bye, everyone.